what is going on here. I'm usually able to do live on Facebook. Why is it interacting with me? What the hell? Okay. Well, it's not making any sense right now. I can't do this live because I'm not supposed to be over here worried about this. I don't know what's going on. All right, we're trying to get set up here. Let me see. It's telling me that Facebook is not integrated in this live. I don't know. I mean, I'm using this streaming software that's so sophisticated. All right, I want to make sure I don't see if I'm live here right now. All right. So we're live. Cool. All right. All right, folks. Sorry about that. I was confused because this software I'm using. All right, ladies and gentlemen, welcome to this live trade session. Just so you know, before I start, I want to post out here my disclaimer that I'm not a financial advisor. So here's our risk disclaimer. All right, ladies and gentlemen, thank you for taking a look at the financial risk disclaimer. So this morning we're going to be looking at, obviously I always trade, well, most of the times I trade futures. So as you can see over here, this screen over here, we have up here the NASDAQ. The market is going to be opening in about 3 minutes. The New York, well, in about 2 minutes. Just give me 1 second while I try to get some things set up here. So this morning, I've been up about an hour and a half trying to do a pre-market analysis just to see where the price might go. This morning, we're trying to see, hey, can we win? Are we able to trade down and get some real money out of this market in no time? The beautiful thing about trading is being able to get in here in a few minutes and make what you will have to work a whole month to make. That's what's really intriguing about it. It brings dignity to you. So this morning I'm going to be doing the analysis right in front of you. And then, so as it stands right now, I do not have a bias. Just like yesterday, I don't have a bias. However, I still see that, yesterday I didn't do a live, but I did a recording. And I still see that yesterday we had, I did my initial analysis. Since I didn't have a bias, I went off of the fact that I saw some divergence in the three main assets as it relates to futures. Which on the left here you see we have the. Let me try to move my. If you don't mind, I'm gonna really minimize myself so you can be able to see the S&P 500. Okay. Because I want you to be able to see it good. So let me try to minimize myself, make myself really small, or maybe even Um, Maybe even switch off to where you don't have to see me, but you can hear my voice in the background, and I'll come back and forth. So I'm gonna switch to the screen without sharing myself. So there we go. So you can see the three commodities. That's fair enough to you. The market is gonna open in a few seconds. If you look down here, it says it's 9:29:48 seconds. So it opens in a few seconds. Usually what I do is I will switch to the regular trading hours so I can see where the market closed yesterday and then where it's going to open today. All right, boom, the market it's 9:30 now. We don't have a gap, so that's good. We don't have an opening range gap, which is strange, but we do have a so the market just opened. This big red candle you see falling down here, that's your 9:30 candle. You see how it's going down? It's going to sweep out some liquidities, okay? So we have liquidity here on a 1 minute. We also have liquidity. It already took this one out, so I'm not going to draw the line. It's probably going to come down here and take out liquidity. As it stands right now, I do not have a bias, meaning I can't say where I think the price is going to go this morning. But what I'll do is I'll go to the higher time frame. So let's go to 15 minutes. So on the left here, we're looking at the Nasdaq. On the upper right hand corner, this is the S&P 500. And then on the lower right hand corner, we're looking at the Dow Jones. Okay, this is the US 30, the Dow Jones. Over here, this is on the upper right hand corner. This is the US 500, pretty much, for lack of a better description. This is the S&P 500. The top 500 companies in the United States of America are traded right within this asset right here. And then on the lower right hand corner, the top 30 companies in the US, the US 30, are traded under the Dow Jones. And then on the left hand side here, the top 100 companies in the United States of America are here in the Nasdaq, traded on the Nasdaq. Now you see that 9:30 candle was a big red candle, and it didn't go very far. It had a huge momentum, but it really didn't go very far. However, though, we need to figure out our buyers. Where is the market going this morning, so we can figure out how we're going to trade. Let me just increase my contract. Usually I like to start with 2 contracts and then scale in. So what I'm going to do is to have a bias, since I already know, looking at the lower time frame, which is the 1 minute, because we're looking at the 1 minute. If you look right here, it's the 1 minute. Okay, even if you click to the S&P 500 on the upper right hand corner, that's the 1 minute. If you click here on the lower right hand corner, that's the Dow Jones, that's the 1 minute. So what I'm going to do is I'm going to scale up to the 15-minute time frame of each of these asset classes, because what I'm doing right now is I'm literally analyzing with you. This is how I do my pre-market analysis or my market analysis to figure out my bias for the day or as to how I'm going to trade. So I'm going to go up to the 15-minute right here. This is the 15-minute on the S&P on the Nasdaq. Okay, 15 minutes. This is the 15-minute. We're going to go to 15 minutes on the S&P 500 on the upper right-hand corner. Boom, 15 minutes. So you see it looks different from what it looked like when it was at the 1 minute mark. Okay, I'm looking for divergence. Okay, I'm looking for divergence because divergence also helps to inform your bias for the day. And then we'll go on the lower right hand corner to the Dow Jones. Let's go to the 15-minute. Boom. I'm looking for divergence. And we talked very briefly yesterday about what a divergence is. And you saw me trade yesterday, and I came out based on my analysis, and with the help of spotting the divergence based on my analysis, I was able to pull out $1,782 in less than 40 minutes. So now you're seeing some white circles, right? You're looking at some white circles. These were the divergence that I saw yesterday that helped inform my decision yesterday as to what direction the market was going to go in. So you saw, like on the left-hand side right here, you see three white circles. The one that's lower was a high that formed, and then the next one was a high, and then the third one was an even higher high. The Nasdaq swept the two first highs. You come to the S&P 500 on the upper right-hand corner. The 2 first highs. Okay, so the first one on the left was a high, and then it formed a low instead of forming a high like it did here on the Nasdaq. No, it formed a low. That was a divergence. And then the third one was a high that swept both initial highs, right? So then we'll come down to the lower right-hand corner of the Dow Jones, the US 30. This high right here is the same as this high on the left, the Nasdaq. And then this low that was formed is the same as this high on the Nasdaq. So I mean on the Nasdaq. So that was a divergence. And then what happened? The third high on the lower right hand corner here, which is the Dow Jones, did not sweep. It swept the second high, but it didn't sweep the first high. So that was a divergence, meaning telling me that the price was going to go down. And there are many other things you look for, but that's just a simple, short way of really describing what a divergence is. But when I looked on the S&P, on the Nasdaq, on the upper right hand corner, I saw that third high swept the first two highs. So what happened was that third high. The reason why it acted different from this one on the bottom here, the Dow Jones, is because it went to sweep. It went out to clear liquidity, meaning it went to get more money to keep going down. So, and this is a whole lot. It's a mouthful. You're gonna have to, and I'm talking fast right now because the market is open. I need to switch back so we can look into trading. And just so you know, I am not a financial advisor. So when I start to take my trade and when I analyze and decide when to get into a trade, and if you choose to trade along with it, you're doing it at your own risk. I'm not a financial advisor, so you shouldn't be following my lead as far as when to trade. I'm not a financial advisor. Okay, I work in healthcare. That's my area. I'll be over. That's where I would say. I don't work there for very much longer because after trading, I don't really need to be going to work. It's a waste of my time, to be honest with you. But I'm not a financial advisor, so I'm just letting you know when I started to take my trade. And if you're trading along and you decided to do it with your own money, it's up to you. You're doing it at your own risk. Facebook knows that I'm not a financial advisor. I played my disclaimer at the beginning of this video to show you that I'm not a financial advisor. So quickly, let me just put the disclaimer back again, just for the next 2 seconds, so you can see what my disclaimer looks like, telling you that I'm not a financial advisor. This is my risk disclaimer. Folks, I'm not a financial advisor. You can pause the video here and watch this. This is a disclaimer, but I'm moving on because we got to get into something this morning, okay? So let's get back here. So now, but we got to trade. We got to make some money, okay? We got to look for money. We need to make money this morning, and that's the goal of being here. So I saw those divergences yesterday, and the divergence still seems to be holding, right? If you notice, this is still the highest high from yesterday on the 15-minute, right there on the Nasdaq, up here on the S&P 500, and right here on the Dow Jones. Well, this is not the highest high on the Dow Jones because the Dow Jones did not clear this high, which is why the divergence still holds. And if you look at the rest of the 15-minute, we've been forming lower lows since yesterday. We've been forming lower lows. Look in the upper right-hand corner, the S&P 500. This high is higher than this high. So this high is lower than this high, and this high is lower than this high. Let me draw a circle so you can see what I'm talking about. Okay, this high is lower than this high, which is also lower than this high. So we continuing with this downward movement. Okay, on the S&P 500, and the same thing seems to be happening on the almighty Nasdaq. I call it almighty because that's what I trade on. By the way, happy today is the 13th of March, Thursday. We just missed Friday the 13th by one day. This would have been Friday the 13th. I would have worn my Freddy Krueger costume, but I can't do it. So you look on the Nasdaq, this high right here is lower than this high, which is also lower than this high. So we're keeping on this downward momentum. So it looks like the buyers from yesterday is what we're going to base the buyers from yesterday is what we're going to base our buyers off of today. We're going to continue looking to go down, especially after you saw that 9:30 candle, right? When it formed, you saw what happened at the 8:30 news this morning. We saw a huge liquidity sweep. So now let me just go back. Let me go up one more time frame to the 1 hour. You're going to see the divergence in an even more pronounced way. You see, this is the 1 hour of the Nasdaq right here. Let's go to the 1 hour on the upper right hand corner of the S&P 500. This is the 1 hour of the S&P 500. All right, share the show for me if you don't mind. There are a lot of people who need to change their lives, especially what's beautiful about this thing here is, of course, I'm not doing politics. Usually politics, you get a lot of people coming to view, but the politics we do will not change your life compared to this stuff, okay? This stuff will change your life instantly if you pay attention and dedicate at least another year of your life to this stuff. You can be sitting in your home while your ministers go into work to go do corruption and steal money. You can sit in your home in less than 20 minutes and make what your ministers will make in a whole month. And this is beautiful. You don't have to have a degree or whatever. It's beautiful. And you can trade the U.S. stock market. You don't have to be in the U.S. to do it. You can live anywhere in the world and do it. So, so the lower right-hand corner, the 1 hour, this is it. More pronounced. This stuff can change your life, okay? I reside in the U.S. I have a pretty nice career, real wonderful career, and I see this as an even better opportunity to leave that career, So my career is very honorable in America. It's not something that is not a low grade career. It's really good. But, if I can sit here on my computer in my office and make, in about 20, 30 minutes what I would make in a month, then what's the use of going in, So, hey, so look at the divergence on the 1 hour. You see over here on the left-hand side, you see what happened. This circle on the bottom, and then a higher high, and then a higher high. This third high swept these two highs. But if you come to the S&P 500 on the upper right-hand corner, this high right here, and then a low formed. Instead of making a high like it did over here, it formed a low. That was a quick divergence. And then the third one formed an even higher high, sweeping the first two highs. But when you come to the lower bottom, the lower right-hand corner on the Dow Jones, right? The first high was formed, right? And then a low formed instead of forming a high like it did on the left-hand side, the NASDAQ. And then the third one did not even sweep the first high. It only swept the second high. That was that divergence that I saw that informed my buyers yesterday. And that's when I took that trade, and I was very confident. And you saw how we went and won that money in no time. So today, I'm going to say that my bias is going to remain the same. We're going to be bearish for one other reason. But when I switch to the lower time frame, I will tell you that other reason why I think we're going to go down. But even as you look at the candles right now, look at these last candles like on the 1 hour. You see this candle right here is going back and forth, but eventually it's going to form to be a bearish candle. The reason why I'm saying that because I'm looking at something called a 1 hour bearish order block that's sitting down right here. So that's going to probably take us down. That's the S&P 500. You come to the NASDAQ where I usually trade. There is another 1 hour bearish order block. It's sitting right here as well. So we'll talk about what an order block is. All these things require special topics. I'm just going to say those words now so you can hear them. But these are some of the reasons. So now we're going to start going back down. Okay, let's go 15 minutes on this side here. You see this big red candle. It's going down. I should have been in a trade. If I were in teaching, I would be in a trade right now. But it's because of you that I'm not already in a trade. But my bias, I think we have a bias. We've done the analysis. We did the analysis together. I know I was speaking fast because the market is open. So there's really no time to talk slow right now, right? We got to hit it. So I had to talk fast. So now let's go down to the 1 minute. Look at the left-hand side of the NASDAQ. We dropped to the 1 minute because I trade on a 1 minute time frame. That's where I do my trades. Okay. So 1 minute on the NASDAQ. All right. And then we're going to go to the 1 minute here on the S&P 500 in the upper right-hand corner. 1 minute. Folks, forgive me for talking too fast. Usually you would grasp what I'm saying if I were live for the pre-market analysis, but I didn't go live for the pre-market analysis. I did it by myself because I'm still a rookie to this game. Even though you see me for the last couple of days like winning big, but I'm still a rookie to the game. It's just the grace of God, Until I'm able to grasp it that quick and really just kind of, act like I've been doing it forever. But no, I'm new to it. So I'm not going to lie to you. Less than 7 months, Less than 7 months of not trading, but just analyzing, like studying or price tape reading, like ICT would say. And by the way, I haven't mentioned, but the guy whose concept I trade off of is Michael J. Huddleston, Inner Circle Trader. Let me give you a quick snippet of what his channel looks like. But I'll get to that. Now look at the news here. You see today is the 13th, right? We had a news at today is Thursday the 13th. We had a news at 7:30. We see right here, we see the CPI came out, the CPI and PPI, and the unemployment claims. This is the U.S. dollar, the United States of America. So those were major news events. So that's why you see that when the news popped up today. Okay, guys, I'm going to get in the trade right now, and we'll keep talking. I'll tell you why I'm getting in this trade because I see this downward momentum, and our bias was bearish, and I'm currently in a bullish order block on the 1 minute, but it seems like the price is disrespecting this bullish order block. So in this bullish order block right here, I'm getting in. I just got into the trade. So if you can see on here, we're already up $34. We're up for $56. Now I'm going to trade. My first target is going to be down here. down here. Our first target is $400, but that's not what we're gonna go for. Eventually, we're gonna keep adding. We might end up around $3,000-$4,000. Our first target is $400. As you can see, we're up $57, $74. You will notice that I have not set my stop loss, and there's a reason why I haven't set my stop loss. I'm gonna add another contract right here. Add 2 more. Now you see my new target is $600. I don't know why the market is offering so less this morning for the value, but we're up $104 or whatever. But you know, and mind you, the price may go back up and we might go back into a negative, but that's fine. We're hanging it down here. We're hanging in here because we know that our analysis is right. I can set my stop loss over here, saying that if I lose the trade, then I lose $300, or I can put my stop loss even further up, all right, like further up here, and say if I lose the trade, I lose $500, but I'm not going to set a stop loss right now. I'm going to remove the stop loss. Now, just so you know, that's the wrong way to trade. You always want to set a stop loss. You have to set a stop loss because stop loss saves you from blowing your account. For example, if we were to lose, like you're in Liberia, current going, and you're in a trade and you don't set a stop loss and you lost power, well, the trade continues. And if it goes in your favor, it goes against you, and it keeps going, it'll wipe out your account. So stop loss is very important, but I'm not setting it this morning, okay? I'm not going to set it because yesterday and today were news events. The candles can wick. I don't want to wick into my stop loss, taking me out when I should be winning. But if you notice, I just got in the trade like less than 40 seconds ago, and we're already up $220 something. We're not going to hurry up and run out and say, "Oh, we got money, let's go." No, we're not going to do that. All right, we're going to keep hunkering down here. We're going to hold up. Now we're going down. We're down. Look, just look here. You see, that's the red. This area right here tells you what we have. Right here tells you what we're going for. The $692 is not where we're going to stay. I guarantee you. It's going to go up. Why did I bring my target down here? Because these are liquidities. These are all liquidities all down here. These lines you see here, these are liquidities, okay? So that's why I brought my target down here. Yeah, I could have brought it down here. I can even go further down to these 1 hour liquidity line and bring my target all the way here and say, okay, my new target is $2,262. Okay, let me just leave it down there for now, okay? So that'll be the target for now. Now let's watch the price action. Let's talk about the price action. Let's talk through the price action. Mind you, I'm also looking on the right hand side. I'm looking at the other commodities, okay, seeing how they're acting to see if we're doing good, because I use them as areas of just you look for other things when you're trading. You look for things to tell you that you're on the right track. You can, if you care about the money, you can keep your eye on what's going on here. It's telling you where we are, and we're going for 2,262. Now, folks, here's the other powerful thing about trading, right? I'm determining how much I want to make. You don't do that on your job. Your job is fixed. They tell you how much they're going to pay you. So even if you bust your ass, you work so hard, sweat, do all the sacrifice, go to work 2 hours early, leave 2 hours late, whatever, your pay is going to remain the fucking same. It never changes. So that's just what it is. But over here, you see me, I'm telling you, okay, if I don't want to make 2,000, I want to go back up. I just want to make $1,000. I can determine how much I want to make, right? It's beautiful, but you have to learn the skill set. This took me about 1.5 years of learning. I didn't even touch a demo account for almost a year. I just tip read, following the ICT concept. If you notice, we're down negative, right? We're negative, but that's fine. Our overall buyers is good. I'm looking at so the price, the market open. Let's see where that 9:30 open was. The market open all the way here. So our first real fair value gap is a very important fair value gap of the day. And the first real fair value gap that I can see is here, right? That was the open range fair value gap. Let's see how the price reacts here. Because the price, the algorithm will usually refer to this fair value gap. Okay, we'll talk about what a fair value gap is. We're not going to talk about it now. We'll talk about it later. But this is the real fair value gap. And you look, it's being respected. The price is not even going towards it. But even if it goes towards it, though, I'm still interested to see how it does. Does it pass the consequent encroachment of that fair value gap, which is the middle of that fair value gap? Does it pass it or not? If does it pass it? Does it even? And if it does pass it, though, is it only going to wick above it, or does a body close above it? All those things I'm looking at, because the reason why I'm saying is because those are some of the indicators that will let me know if I'm on track or not, if we're actually going down or not. So let's go to the 15-minute time frame right here. Let's see what's really happening. Because if you just focus on the lower time frame, you might get nervous and start saying, "Oh my gosh, the thing going against me. Look out, we're negative now. We're just up. You saw me. We're just up almost $300, and now we're up again." So, but we're reading the price action, the candlestick. What does it do? It took out this liquidity. So let's take this liquidity out. It's already done because the candle closed below it. So I'm done with that. And we keep going down. Keep going down. We're up $100. So our target is 1,001 something, or like I said, I can bring it back down to this 1 hour, liquidity that's sitting right here, and our new target is going to be $2,232. This is all based on how long I'm willing to be in this trade. So let's watch and see, folks. All right, let's just watch price action. There's a little consolidation happening here, meaning you see a lot of candlesticks forming right in this area. That's what you call consolidation. They're forming in the area. They're not moving up, moving down. They're just kind of clustering right here. This is where they're clustering. There's a little consolidation right here. Just a cluster happening here. But it's okay. The market doesn't owe us anything. And this whole thing can go against me. And this $2,000 something that I'm trying to win is what I could end up losing this morning, right? But you trust the analysis. I was talking back and forth with one of my friends yesterday. He says it's risky. I say it's only risky if you don't do real good management. Now we're down $100. That's when it's risky. But we're not going to panic. We're going to watch and see how the price reacts. 15-minute time frame. Let's see. There's a big, long red candle right here. Okay, big long red candle. So all that stuff that's happening on the 1 minute, this is it right here. This 15-minute candle is just trying to it's going to try to fill in this gap as much as it can and keep going down. But if you notice, this initial fair value gap that I drew over here has not been disrespected. It's being highly respected. Look at the wick of that red candle. You see what happened? Now look, we're up 300. We're almost up $400. It's respecting it. So it's still telling me that my bias is good. We're still on track. So I'm not going to panic. I'm not going to say, "Oh my gosh, I'm losing money. Let me get out the market." No, we're going to stay in here. Okay. And I'm not going to, because I'm up $300 in less than 5 minutes, then I'm going to say, "Oh wow, let me get out." No, we got a target of 2,000 something. We may not reach that target because I may not be patient enough to sit here the whole time. So that's your 15-minute candle. You see what it's doing? The highest I will go, because I'm literally scalping this morning, the highest I will go would be the 1 hour. Let's go to 1 hour. No, that was the 1 hour on the S&P 500. Let's go back to the 1 hour on the NASDAQ, which I'm trading. 1 hour. You see the 1 hour? We got a big, long candle. It's forming down. All right? We're bearish the hell up. So we're going down. There's a lot of liquidities here. There's liquidity right here. There's this liquidity all the way down here. I don't anticipate that I'm going to wait for it to reach all the way here to the 2,000 mark. I might adjust my target, or I might add into my trade to increase my profit margin, and it also increases the amount you can lose. Every time you increase your profit margin, you also increase the amount that you can lose, right? So that's what we're doing here. So let me put myself here at least so you can see me a little bit. On the upper right hand corner, if you notice, I'm right there now. So we're up 300. We're almost up $400. Folks, this is happening in real time. Okay, this is a live market. If you look on the bottom here, this is my broker AMP. You see AMP live. So this is not a demo account. This is not a paper trading. I'm trading real money. Okay, so whatever I make this morning goes to me. It goes to my bank. It's for me. So I'm not bullshitting you. Like, look on the lower. Look here where you see the mouse right here. That's my real live account. If you look up here, the CME, you see that green? The green tells you that the market is live. So I'm just trying to give you proof. What I'm going to do is let me enlarge in this particular screen. So this is what I'm trading on. So look at it, it's better. You can look at it better. Look at the price action. Because the reason why I can do it, because I have other monitors that you cannot see, but I can see, and I'm also monitoring the other asset classes as well. So I'm still seeing what's going on. So, but at least you can look here and see it better because it's bigger, it's larger, and everything. So we're looking at the attitude of these candlesticks, and we're just bearish. Okay, we're bearish. We're going down. Bearish means we're going down. We're up $400. I'm not going to panic to run out of the market and say, "Oh, I'm good with 400." We still got some liquidity down here. Look at this line right here. This is liquidity, 15-minute. Another 15-minute liquidity. Down here, the yellow line, 1 hour. So, we're cool. We're almost up $500. Now we're up $500. Just watch. Like I said, I haven't set a stop loss, but I could just move this up here and say, if I'm wrong about this trade, which I should do now, because I can see that we're really bearish. So I can set my stop loss right on top here and say, if I lose the trade, I will lose $316. But if I win the trade, I'm winning $2,232. Here's what I'm going to do, okay? I'm looking for one more thing to happen. You see, I would predict that this is a bearish fair value gap that's forming here. And if it is a bearish fair value gap and it forms successfully, I will add in 2 more contracts so I can increase my profit margin, or my target margin, which is also going to increase the amount that I could lose. Every time you increase your target margin, you also increase the amount that you can lose. Just know that, okay? Just be cognizant of that. Now, I can bring my stop loss even further into the middle, the consequent encroachment of this fair value gap, the middle of this fair value gap, because this fair value gap is being respected like hell. So which means now if I lose, I will only lose $188 as you see here. And if I win, I'm still up for $2,232. You see, now we're up $700, right? I'm going to add in to my trade right here because the candle is telling me that we're moving. So I'm adding 2 more contracts. So watch this red button up here. When I press it, boom. Now look at my new target. It's $2,970. That's my new target. But my new loss potential is $659. So I'm close to the $3,000. If I stay in the market long enough and the market does go here and hits this target, I will win. I will be getting $3,970 in less than 30 minutes or 30 or 40 minutes. But if I lose, I will be losing $659. Now, what I'm going to do is I'm going to remove my stop loss again. I don't like for it to be there on news days because the candle can wick, meaning it doesn't really intend to go up, but it will just go up and then wick back down. That's why you see these long wicks form and then just take me out for no reason out. And that will be a mistake kind of taken out. So I'm moving my loss potential and just keep my target. Now we're up $700. Nobody's stressing here, bro. We're relaxing. Nobody rushing to get out because I got $700. We're not doing that. We're holding tight, okay? We're holding tight. This is some green juice, green juice, just all green. Try to get your alkaline. This is very good for your health. So remember, I'm a healthcare practitioner. I'm not a financial guy. I was just blessed by God to learn this stuff. And I want to move to Dubai for a year. And I didn't want to be working. You know how people work online? I don't like that. I don't like working. If I'm out of the country, I don't want to have to get up on somebody's time. So I was trying to figure out how do I go to Dubai and live for a year and still make a lot of money, way more than I make at work in no time, and just enjoy Dubai. And so that's why I started to learn trading. We all have our reasons to do stuff. That was my reason for learning trading. We're up $900. So our target here is what? $2,970. Now I guarantee you I may not sit here and wait for it to go down, or I may wait. If I see perpetual momentum of these candles, right, going down, like if I start to see shorter and smaller red candles forming going down, right, then I would say, no, we're up $1,000. Then I would say, nah, let me just get out early. But if I see just continually dropping down heavily, I'm going to stay in here. So we're up 1,100. I can add into my trade, but let's not do. Let me just add one more contract to increase my balance. Let's just take my target to $3,000. So let me just add one more contract. So now my new target is $3,271. If you look here on the bottom, okay, $3,271. One time, right now we're up $1,220. That's my new target. So we are going down. We're getting close enough to my target, folks. If we come around here, I will get out. And we notice we've been in this trade less than 30 minutes. I'm already up $1,300, almost $1,400. Okay, this is real, bro. This is real. This is live. Let me remind you, look on the bottom here, AMP Live. That's a live broker account. Okay, this is real money I'm making. Share this video to people so they can start following me, and I will start politics next year, not this year. But for now, I want to help young people to make money. So when we come do politics, you can't follow us because you want money from us. You will follow us because you want to. All right. You will follow President Weah because you want to, not because you want money from him, because you know that's who I'm going to be supporting, President Weah. So when we start to do politics, the Honorable Basiga and I, you will know that we're here to save you. We're not here to just fool you. But right now, I want to teach you how to make money. Joseph Boyka people don't teach you that stuff. I'm here to teach you how to make money. Then you learn how to make money. Then when you follow President Weah, you only come in because you come in at your own volition. You see? So I'm up $1,300 and almost $1,400 in less than 30 minutes. That's what I want you to pay attention to. So we're still going down. These guys see a fair value gap that formed here pretty strongly. This fair value gap. So that's not the main fair value gap. So let me just mark it differently. The main fair value gap. There we go. So you see that this fair value gap formed. We're up 1,200, 1,300. Most of you got to work 2-3 weeks to make that. I just made it in less than 30 minutes. Less than 20 minutes to be honest, because the market opened at 9:30 and it's only 9:58. So yeah, less than 30 minutes for sure. Let's see how this price reacts in this fair value gap. Let's be typical with the price action. Does it come through this fair value gap and rip through it, or does it respect it and turn around and keep going down? Because my target is $3,271, and I have the nerve to sit here this morning and make this money right in front of you, and it's going to be in less than it'll be if it moves as fast as it's moving now. That 3,271 would have been made in less than 40 minutes, 50 minutes, yeah. So it's just green juice I'm drinking. Green juice, no sugar added. It's just everything green. Now I'm looking at the other commodities, and I'm looking at the higher time frame, and my bias is still looking good. So this liquidity was taken out. We'll take this out. This one, I seen a candle close below it already. This red candle already closed below it. So that's good. So what I'm noticing is this fair value gap that I just drew is being respected. You see the price didn't go through it. Now we're up 1,500. How many of you guys will be up 1,500 in less than 20 minutes and don't get out? We're up 1,600, 1,700. So we're going for $3,271 just because this liquidity down here, right? That's what we're going for, folks. This is not AI. This is me, Balakim Adil Loma boy from Lofa, sitting right here doing this in front of you. Okay? This is me. This is who I am. And it's happening in front of your face in real time. So watch this. It's happening in real time. So we're up 1,700. I still have confidence that we're going down because I'm looking at another thing that you cannot see. But let me just click on it real quick. See, this is the 15 minutes. See, look at the 15 minutes. See how these candles are forming? It's just two long, big 15-minute candles. We'll keep going down. And this is the target that I'm going for right here, right? This is the target, this yellow line. But I drew the yellow line is where the liquidity is. But I drew my target think about, let's see, maybe about a couple of ticks above this yellow line because I'm trading futures, so we say ticks. If you're trading forex, you say pips, but I'm trading futures, so we say ticks. So my target is like a couple of ticks above this yellow line. So I expect bigger momentum because if you look on a higher time frame, this 15-minute liquidity got clear here. There is actually, let me move my target in here. The reason why let me tell you why I'm moving my target to 2,800, and I'll bring it back down, but I want to tell you why. Because right here on this 15-minute time frame, from here to here, right, is something you call an order block, and in this case, it's a bullish order block according to ICT. All right, right here, this is an order block, and I want to see how the price acts in this order block. Okay, on this 15-minute order block. Let me do it, make it a consolidation block and put a middle line there. Let's put a middle line. That middle line is good. I want to see how this price acts because it's currently within this 15-minute bullish order block. The price is there, right? And this middle line is what you call the main threshold, which is basically just the middle of that order block. Okay, this middle line. Now, we're seeing that the candlestick there's a wick here, is wicking. Even when I look on a 15-minute, I see a wick forming. But that's not a clear indication that we're reversing because it still has some liquidity. It's close enough, and we don't know how it's going to act in this order block. Now we're down $1,000 to $1,000. We're just up $1,800, $1,900. Now we're down to $1,000. But let's see what happens. Okay, we're not going to panic. We're not going to get too carried away. We're also in something called a macro, okay, or macro. A macro is the last 10 minutes of a particular of an hour to the first 10 minutes of the next hour. So if you noticed, this is now 10:03, right? We got in the trade around 9. I think we got in the trade around 9:50. Now it's 10:03. So the macro is a new set of instructions comes into the market. You notice you're probably seeing here that what we had at 1,800 or 1,900 we had is gone down to $600, and that could make you panic that, oh my gosh, we're actually losing. But that's not what's going to happen. This is just a retracement. I can guarantee you just a retracement. Like if we hit the 1 hour time frame, you will see that It is a retracement happening. It is a retracement. Let's hit the daily. You will see that it's still a red candle. You see, this is the daily right here. And it is still a red candle. Let me move this order block. It is still a red candle. It's just a retracement happening on that. Okay, it's still a bearish candle. So we're not going to trip. We're not going to start tripping right now. We'll go back to the 1 hour. It's just a retracement happening. Okay, it's a retracement that's happening. It's a retracement. This thing is going to turn back around and keep going down. And as a matter of fact, let me move my target back down to the 3,000 something, because that, I believe, is where we're going. Also, though, I'm going to be observing this wick. And these are all based on the ICT trading concept. Now we're up 800. You see, I'm not panicking. This is all based on the ICT trading concept. This is the best trading concept. You see this wick right here? I'm measuring this wick, right? This wick is also another ICT PD array, something that you look at when you're trading. This wick, this is the middle. This pink dotted line is the middle of that wick. Also, I want to see, does the price come below this wick? This is on a 1 hour time frame. So that's another good one for me. So when I drop down to the 1 minute time frame, you will see that wick is going to be there. It will look bigger, but that's another area that when this is done happening, you see this retracement that's happening, this candle, this green candle that's forming, when it's done, it might go up. You see, now we're down from 1,800. Now we're going to be negative here in a minute. Watch, we're about to be negative. You see, look at what we have. Look here, it's about to be negative, but that's fine. I'm not panicking, right? The objective is to come down here. We're into this silver bullet. It's 10:05. We're in the morning, the AM silver bullet. But I believe that silver bullet, although it looks like it wants to go up, but it's gonna eventually turn around and go down. So we're not panicking, okay? If I was someone who panicked, I would have gotten out of the trade when I was at 1,800 in less than 8-9 minutes. But I'm not panicking, okay? Because we kind of have confidence in what's going on here. And if I lose, that's good. If I was just trading by myself, I would have gotten out when I was at 1,000 something. I'm not going to lie to you. You don't make that kind of money in less than 10 minutes and sit around with it. Because we know what we got to go through in America to make even less than half of that. So I would have gotten out, but I'm teaching. So I want you to see that it works. So you can have confidence in me. So when I formulate my course, which I'm going to do here shortly, you can have confidence that it does work. So I'm trading live in front of you so you can see that this stuff works. And I'm not rushing. I'm not panicking. I'm not running for money. The money will be there. You know, there is the afternoon session. If I lose this trade right here, I can just come back in the afternoon and trade and make 2 times that. So the power of trading, of learning this particular skill set, is just being patient, because the money will always be there, especially when Donald Trump is president. It happened the first 4 years when he was president. People who were trading became millionaires. So he's president again, and things are just moving smooth in the market. It's real. I'm not trying to be political, but it's real. So I'm not panicking. This is a retracement. This is a retracement. I will even be okay with this candlestick coming back all the way to this particular fair value gap that I drew out, because it could come back and refer to it and keep going down. I have a lot of reasons to believe this price is going down. Let me give you one more reason. This is all going to just overwhelm me, but I will give you one more reason. Let me take this fair value gap. You see on this 1 hour time frame, morning Baleo, my daughter just woke up. You see on this 1 hour time frame, there is a propulsion block. I'm not going to tell you what that is, but it's another PD array. It's called propulsion block, a bearish propulsion block. So I have reasons to believe that even if the candle comes all the way up here, which is where it went eventually when we started trading, we're in a big negative, you saw that, it's going to turn back and come back to our ultimate objective of perhaps $3,360. Or if it comes to this pink dotted line, I will get out, because that's the middle of this wick, of this 1 hour wick. You know, so that takes a lot for it to come back down here. It takes a lot. So we're in this, we're in the silver bullet now. At some point, I expect this price to turn around very soon and start going back down. I don't think it's going to be a bullish silver bullet. I believe it's going to be a bearish silver bullet. So I'm going to drop back down to the lower time frame. That's 15 minutes. That's 15 minutes. You see this big green candle is forming here. That is this green candle that wiped all our profit we had just now. This green candle. But that green candle is going to pay for it, because it's going to eventually turn back down. Okay? It came down to a $1,800. That was for people who just want to get in and get out. For me, that's what I would have done. I'm not here to be. The power of trading is you make your money. You see how quick you make your money. Why some people go into work for 4 weeks to make that? You make your money within the first 10, 15 minutes of the trade, and you're done. I could be done for the whole week, because people make this in a week. So when I made that 1,800, it could be my own work week. I'm done with work for the whole week, you know. So, but I'm trying to make that in couple of minutes of a day, each and every day. So, you know, if we can hit about start hitting about 10, 15 grand a week, then that's good, and that's the goal, right? We're almost, I mean, like between last Thursday and today, which is Thursday, which is really it's not a calendar week, but it's a fiscal week. Just trading these short bursts of 20 minutes, 10 minutes here, we came close to $10,000 just within that time. So it's not like we're actually sitting down here nervous or whatever. The possibility to make any amount of money is mind-boggling. So we're here. We're seeing this big green candle form. Some people are wishing for me to fail this morning, and I don't mind. Listen, if I was worried about failing, I was going to take my target when I was at 1,800. That's a big news. People were spread out. Wow, this guy was trading in less than 10 minutes. He made 1,900. I could have walked away. You saw it happening. So just tell yourself that we made that money. But I didn't take it because I'm teaching. And I want you to see the end of this. I could have taken that. So even if I end up staying in and the price just, because the market doesn't owe us anything, it could decide to just go up and just mess me up. Some of you might be excited. Oh yeah, he lost all that money in front of us, but you will forget to say, oh, he actually stayed in because of us. He's teaching, so he didn't want to walk away when he had a shitload of money in 10 minutes. So come on, I'm not afraid. I'm not nervous. Watch this. You never be afraid, man. Fred is the biggest enemy of real progress. So you face fears head on and do what you got to do, and let the chips fall where they may. This is where we are. So we see a big 15-minute candle just keeps forming. Let's drop down to the 5 minutes. We don't usually look at the 5 minutes a lot, but look, we got the 5 minutes. Now in the 5 minute, I see another PD array that helps me to say, we might continue to be bearish. You see right here, this is a fair value gap on the 5 minute, right? And this 5 minute fair value gap is being respected. The reason why I say it's being respected, because let me take this to the main fair value. Perfect. It's being respected because you see the middle. Let me change the mouse thing to this. If you look here, you see the middle, that white dotted line, right? That's called the consequent encroachment of the fair value gap. Only wicks you see going above it. Only this green wick went above it. No candle body has actually closed above it. So this fair value gap is being respected. Remember the last time I talked about when you see the price respecting a particular PD array, that's also telling you that your bias is still intact. Meaning our bias for the day, as we made the analysis together, is that we're going down. So I'm looking at this bearish fair value gap, because the bearish fair value gap, if it's going to be disrespected, the price will go through it and keep going up. But it's respecting it. It's not even crossing the middle of that fair value gap, let alone the initial fair value gap of the day, which is also bearish. For that one, only once or twice you see the 5 minutes candle wicked under it. They didn't even touch it. So it's being respected very highly. And so you see on this 5 minutes right here, you see that this particular fair value gap is being respected. Now, mind you, on the bottom here, okay, is a bullish order block. But I'm not concerned about that bullish order block. Let's be honest, because our buyer says we're going down, and the initial PD arrays that were formed are still being respected. So we just hunker down. So we're looking at the 5 minutes. So these are things you look at when you're trading, not to be nervous. If you notice, I'm not even paying attention to this side where the money is going up, going down. Okay, so we see that the middle of this fair value gap has been crossed, but this candle has not closed yet. Okay, it's crossed all the way above it. Watch this happen in real time. Folks, even if I lose this trade, I'll lose it for you because I want you to learn, right? I could have gotten out when I was at 1,800 in less than 10 minutes. So this is for you if I lose this trade, because I can lose this trade, turn this live off, get back in the market and make that money back. So I'm not here to worry about it. All right, so we'll talk about the disrespect of a fair value gap. This bearish fair value gap is being disrespected. You see it's being disrespected because now the candle has not only crossed this middle, this consequent encroachment. We saw that it's even going above it, even though it's still a wick that's above it. It's not a body, but let's see how this particular 5 minute candle ends up closing. So let's watch this particular 5 minute candle, okay? Let's see how it ends up closing. So basically now we are breaking down the market. We have strip the market naked and we're breaking it down price action by price action. Usually, if you see regular traders how they trade, they got indicators that talk about moving average, got all these curves on the chart just looking dirty and stuff like that. That's not how you trade. That's why a lot of people lose and they don't make money and they run away and quit trading. Because according to ICT, my mentor, which is the best ever in the whole world, you trade based on price action. So watch, we want to see what this 5-minute candle does in this fair value gap. Does it respect it? So far, we can say it's really, I know I said it's been disrespected. I only say that because now we've seen that of cross above that consequent encouragement. But let's keep watching and see. How does this 5-minute candle end up closing, this bullish candle? Does it close on top here? If it closes on top, fine. What does it do with this next fair value gap, the initial fair value gap? If it comes up here and then it messes around and keeps closing above, then I will start thinking, okay, maybe our thought for the day is pretty much wrong and we're going to take a loss and walk away. But for now, we're not going to do that. We're just watching the price action. Because I still believe that there are reasons why this thing is going to turn back around. And like I said, I'm also looking on the right-hand side and other monitors under me here and all of that. I'm looking at a lot of other time frames on these price actions to see what's happening, okay? And I don't have any real big confidence that, okay, so on this 5-minute, we see that the first closure above this fair value gap, this bearish fair value gap is disrespected. Okay, let's keep going. Now we're down $400. Let's keep going. So we just watch price action. Now let's drop down to the 1 minute. Let's see what's actually happening. Okay, so we saw that the 10. So it looks at that silver bullet, that 10 o'clock silver bullet. We started somewhere around here on the 1 minute. It started here. It looks to be going up. It looks to be going up. But I'm pretty confident though that after this run, it's probably coming up to clear this liquidity if it even reaches this far. I believe it's just coming to refer to this initial fair value gap of the day, and then it'll turn back around within this fair value gap and start going back down. This fair value gap right here. So I believe it's going to come right in this fair value gap, okay? Just to refer to it, because this is the initial fair value gap and it gets referred to, right? So I believe this thing is coming, the algorithm is coming just to refer to the initial fair value gap of the day and then keep going down. But if it decides not to, it may decide to come and take out this liquidity, this 1 minute line, this gray line up here. That's liquidity. So like I said again, folks, I'm doing this because of you. You saw me, I was up $1,800 in less than 10 minutes, but I didn't get out the trade. I stayed in because I'm teaching. And what I want us to read the price action together, right? So that's what we're doing. My target is still down here at $3,362. That's still my target. But so let's watch and see what the market wants to give us. Okay? So let's watch and see. We're not panicking. I want to see this as a retracement. I want to believe it's a retracement, but let's watch and see. If I weren't teaching, I would have taken that $1,800 long time that I made in less than 10 minutes and gone, wipe my mouth, and go sit down and relax for the day. I didn't do it because of you. So, and I'm not always going to do it. Next time I'm trading live and I get into a profit, I'm taking it out. But I'm doing this for you to learn price action, okay? So we're down $700. So this is because of you. Now let's see what it does with this fair value gap right here. Okay, this initial fair value gap of the day. Let's see what the price does, what the algorithm does. Let's see what it does. How does it react when it gets into this fair value gap? That's what I mean when I say let's see what it does, right? Let me enlarge in this. Let's see how it reacts when it gets into this fair value gap. All right. So if you look here on the bottom, this 1 minute counter, there was a wick. That was a turtle soup, and we saw a rejection happen here. So these were signs that the market was going up. Like if I weren't teaching and I was just trading by myself, I would have taken that profit at 1,800 that I had, and then I would have gotten in to go up, at least because I knew it was going to make a little upwards momentum run, a short run. I don't believe there's going to be a long upward run. It's going to be a short run. But I would have then by now it would have been an additional $900 probably I would have made. So it would have been the 1,800 plus another 900. I would have, because you can trade up and down. So I would have done that, but I decided to stay in the initial buyers because our target was at 3,000 something, and I decided to hold off because of this liquidity down here, and I didn't get out. So because I want to see what happens, but I could have gotten out there and then I would have taken this ride up again to here, and by now it's another $900. So, all right, now we're in this fair value gap. Let's see how the price reacts in this fair value gap. Is it running through it? Is it respecting it? Is it just coming to refer to it to say, hey, what's up? You know, I know you're here. I just wanted to come say what's up. I'm heading back down. Let's see what happens. We don't know. Okay, ripping right through it. Ripping. Now we're down $1,000. We're down. Okay. So it ripped through it. Let's see how that candle closes. Do we have a wick closing above it, or we have an actual candle body closing? Let's see what happens. I'm very proud of the fact that, you know, when we had the money, I didn't run away. I didn't get all anxious. I stayed in. So let's see what happens here. We're down $1,000. Look on the left hand side, you see we're down $1,000. Okay, right here. We're down 1,100. Let's see. Remember, with all of the analysis you can have, the market doesn't have to do it what you expect. Okay? Every now and then the market will go against your analysis, but I'm not saying that's what's going to happen now, because I still have confidence that it's going to be a reversal here soon. We still got more things to look at to see where a reversal could happen. If we head back up to the 15-minute, this is just a 15-minute fair value gap that's been filled. And if you really look at it, you see, even though we have this fair value gap here, but there's an overall, a bigger fair value gap right from here. I'm going to draw it out here. Okay, you see it. This is just a 15-minute fair value gap that's been filled in right here. So there's a bigger fair value gap. And even if it goes through this fair value gap, what does it do within this 15-minute bearish order block? There's an order block up here. So you look at a higher time frame to see. So the price still hasn't gone through that initial fair value. Let me make this one thin so you can tell the difference, because I got two fair value gaps in one. So let me make this one less. There we go. So now you're able to better see the two different fair value gaps, right? So this price could have just been going to this other new fair value gap I just drew out on a 15-minute time frame. Is a 15-minute fair value gap, right? It could just be that the price is coming to refer to it as well, because you notice it's still just only wick in the middle of that 15-minute fair value gap, and even the initial fair value gap of the day, which is this long one here, right? You notice that the body of the candle still has not closed. Of the 15-minute candle has not closed above it. It's still just within it. Okay, so this could just be a referral to this 15-minute fair value gap, or it may come into this order block, or it may come clear this liquidity and then turn around and start going back down. Well, let's see what happens. Let's see what happens. So let's go back to the 5 minutes, see what happened on the 5 minutes. Okay. 5-minute candle still hasn't closed yet above that initial fair value gap of the day. This fair value gap here, we're going to take it out because it has been blown through. It blew through like water, which told us that, okay, the market was going up. How far up is it going? We're yet to find out, folks. Remember, we're down $900. We're down $1,000 something. Our target, when the market turns back around, when it's done with that run, is $3,362. So let's see. Just gonna hunker down. Usually when this is happening, I try not to look on the lower time. The lower time frame, like the 1 minute, is where I take my execution. I try not to look at it too much for what's going on. I look at a higher time frame to really see what's really happening. Big picture. We're talking about big picture. So if you look here, that 15-minute fair value gap that I drew, The 1 minute candles have closed just above the consequent encroachment, but not far above it. So is this where our reversal is happening? The reversal we've been expecting? Is that what's happening right now? We see here, it's really not a completion of a bearish order block, so we're not going to say it's a bearish order block. But we see that or this could just be a retracement to continue going up. Okay, so because these candles that are forming, these red candles, are not momentous, they are small. So this could just be a retracement to keep going up against us. But we'll see. We'll see. Remember, target is down here, $3,362 when this market reverses. We're in a silver bullet. We're about 24 minutes into the morning silver bullet. So we have another, what? So you got 60, let's see. So we have another like 30, 35 minutes into the morning silver bullet. All right, we're down 1,200. So the price is ripping through here. It's really ripping through there. It's ripping through there. What's good about this though is, okay. Yeah, we see a lot of momentum on our green candle. Like if you look at the 15-minute time frame right here, it's a lot of momentum. The green candle is forming, it's moving up with a lot of momentum. And I like that. Because when a reversal happens, it's going to be very momentous as well. It's just that silver bullet. So, you know, is this going to go and complete the silver bullet the entire 1 hour? Or that reversal is going to happen within the 1 hour of this silver bullet? Down 1,600. See how far we go. So it passed that. It passed that 15-minute fair value gap. So we're going to take it out. It passed it. I'm going to only keep this fair value gap because this is the main fair value gap of the day. This is the one fair value gap that price refers to consistently throughout the day. So I'm keeping this one. So we're into a 15-minute order block now, right here. We're down 1,300. Let's watch. So you notice one thing, I want to bring one thing to your attention, right? We got to the money faster than it's taking us to get against the money. Remember, we got to the $1,800 profit. It was within 10 minutes. It's taking almost 30, 40 minutes to get to, you know, to get into that negative. So that's a good thing. So it's because of you folks that I'm still sitting here. I could have had my $1,800 in 10 minutes and I would have been gone. But it's all good. So we see the price is wicking into this. This is the order block. When I say order block on the 15 minutes, this is what I'm talking about. Let me draw it out for you. It's a bearish order block. We want to see how the price reacts within this bearish order block right here. That's the bearish order block. Let me put a midline. See how that candle reacts within that bearish order block. See what it does. So remember I said it could be, the price could be coming up to do several things because the algorithm refers to specific areas throughout the day. So my thought was that since it ripped and came up like this, right? It came up and did something called an immediate rebalance on the 15-minute. You saw those two big red candles form down, and then these two big green candles are forming. It's just trying to rebalance. Okay, and in the process of rebalancing here on this 15-minute, it referred to it came and referred to this first initial fair value gap of the day, but it ripped through it, right? It went through it. Now I said the next place it might be going was in this order block, this 15-minute order block, and now it's within this 15-minute order block. So far, the wick touched the main threshold, meaning the middle of that order block, the wick of this 15-minute candle. But let's see what it actually does, the 15-minute candle. Does it stay within this order block? Or is this where it's going to reverse? Did it only come to refer to this order block? You know, it's like when I say refer, it's like there are areas that the algorithm is going to refer to during the price action. And those areas are what ICT termed as the PD arrays, you know, those particular areas. Or it may become declare liquidity as well. Liquidity, where that's why you see I have these lines. Liquidity are places where people's stop losses are sitting, and above or below those stop losses is money. So the algorithm will refer to these areas to clear some money. So that's what we're watching to see. So I said when the market initially opened, it wicked to the top, and I knew it was going to go down. We did the analysis. We saw the divergence. We're just down 1,600. Now we're only down $700. So according to the way this 15-minute candle is acting, are we doing a reversal now? You can't. The one thing is your analysis are there. You would do your analysis, but the market does not owe you anything to make your analysis right. So we have to know that. So we're only down $400. So we saw that perhaps this algorithm only came to refer to this order block, and now it's going back down. But we don't know. We don't know that. This is a retracement happening. So let's just keep waiting. Okay. This could take an hour and a half because it could have been 10 minutes. What could have been 10 minutes for me because of you, it could turn into an hour and a half because I stayed in just so you can see so you can see things work out. I stayed in when I had my $1,900. Now I'm only down $300. So let's see. Did the algorithm only come to refer to these areas, and now it's going back down like I said. So when I start to teach the course, you will realize, because that's why it's good to know about these PD arrays, right? So even though I saw the price moving up, I didn't get nervous. Oh my gosh, I'm down 1,600 when you saw me down 1,600. I could have been nervous. Oh my God, I'm down 1,600. But no, I decided to go on a higher time frame and see what the price, what the algorithm may be trying to do. It may just be coming to refer to certain PD arrays. Regular traders, people who've been trading for long, 10, 20 years, who just drawing lines on the charts, wouldn't know this stuff if they don't learn the ICT way. But I knew that I can wait to see what's happening. So let's just wait and see. So the next 15-minute candle just formed. Okay. So this first long wick that came down, this 15-minute candle, you saw what happened. It came all the way down the wick. Now the next one just formed. So the next one is going back up again. Let's see what happened. What is it trying to do? Is this one that going back up could be the one that's going to turn right back around and form an even bigger red candle and come all the way down to my profit. So you just never know. You never know. So we'll just sit here and watch price action, okay? That's what we're doing right now. We're watching price action. We're watching price action. The last couple of days, the videos that I've posted, you saw easy ride. I said, well, let me challenge myself. Let me not just post a video, because some people are actually doubting the videos. They're saying they're fake recordings. So now I say, let me go live and do a live trade. And you saw when I went live, if I was just about making record, if I just wanted to make news, I had $1,800 in 10 minutes. I would have gotten out, and you guys are going to be like, wow, this guy actually did that. And I actually did it. I just didn't get out of the trade because I wanted you to see more. I wanted you to see us go further down to the 3,000 something. So, but the market said, no, not right now. Right now, I got other plans. So the market is doing what it wants to do. So give me 1 second, okay? I just have to do something real quick. I'll be right back. So what I'm going to do is I'm going to mute this so you can hear. All right. So we're waiting for this reversal. We know it's going to come. So see what I told you about this 15-minute candle? See the next one? It's probably going to be the one that's going to drop down for us. So, you know, like I predicted, because what I'm also looking at on the 15-minute, another thing that's really making me more confident that we're going to continue to go down, okay, is that we talked about those divergences, right? Let me bring this, the divergence that we talked about on the 3 asset classes, right? The divergence is still holding, folks. Yeah, the divergence is still holding, all right? Here's what I mean when I say it's still holding. Just watch this. This is 1 minute over here, so let's take it to 1 hour. It's better to see it in a 1 hour. Perfect, right there. That's the S&P 500 on the top. It's the Dow Jones here. Let's take it to 1 hour. Perfect. That's the Dow Jones, 1 hour on the bottom here. And let's take it down to the 1 hour on the Nasdaq, which I'm trading. That's the Nasdaq 1 hour here on the left hand side. Okay, and the divergence is still holding. Okay, this divergence is still holding. This is still the highest high, and it's still making lower highs. Even with this run that went up here, right? That went up here. The high is still lower. So it's still telling me now we're going down. Okay, even on the S&P 500 on the upper right hand side, you're seeing lower highs still being formed. Lower highs. So we're good. Let's not panic. Let's be patient. This thing is going to turn around and do what we predicted. All right, so let's go down to the 1 minute so we can better see things, because that's the time frame that we're trading on. And the 1 minute is telling me that we're going down. You know, we're down. We're earlier on we're down 1,600. Now we're down only $300. So something about our analysis has got to be right. Let's just watch and see. It's taking a little longer because normally I don't stay this long trading. I'll make my money and get out. You saw I made the money in 10 minutes, but I stayed in because of you. Yeah, so just so you can see it and know that it works. So, oh, taste and see that the Lord is good. Blessed is the man. You know that scripture, or it's a song, whatever. But yeah, look here. So now we're up. So, folks, you just can't be impatient. We're up 7. Look there. Look on the left-hand side. Our prediction. So, look how the price acted here. It came into this order block. This is the 1 minute. That order block I drew on a 15 minute. This is the 1 minute. The price came to that order block and did exactly that. What I predicted was happening. It was only coming to refer to that order block. You see how it came into this order block and it just wicked in here? Even none of these candles bodies enter this order block. It just wicked and then form a turtle soup and then a rejection, and now it's going down. It's going down towards our profit, our target. Now see, look on the left hand side. This is the power of knowing of learning this thing the ICT way, learning the algorithm. So we're making this downward movement. You can never be overexcited. And you can never be too upset when you lose money. You just have to be even keel, right down the middle, like the former coach of the Lakers and the Chicago Bulls, like Phil Jackson. Just be even. Emotionless. No emotions. Because money does not have emotions. Money is emotionless. Money has no blood in it. It doesn't have feelings. So when you're dealing with money, you got to be emotionless or mental. So we see more actions happening here. More actions happening here. And these actions that are happening, I saw, it's just a mini low fair value gap. I'm not going to honor that. I'm pretty confident, though, that we're going to very soon, we're going to run down. The candles are going to start, big red candles are going to start forming to go towards this $3,362 mark. Or even if it comes here, That's 2,600. I could get out there too. So, but I'm just gonna keep it down here for now. Okay, keep it here for now. But very soon I expect huge, large red candles to start forming. Very soon. So we're back up 100 and something dollars. We were up. So let's watch. We were just remember we're just down $1,600. Now we're up $200 because we trusted our analysis. And remember when I was losing, quote unquote losing, I walked you through why it was happening and how I expected the turnaround to happen. And you saw that when I drew that order block on the 15 minute, this blue looking area, that's an order block on the 15 minute, right? I drew that order block. I told you that either the price is coming here to this initial fair value gap just to refer to it, or it's going to this order block to refer to it and turn back around. And that's what's happening now. It has turned back around. Now it's going down. Very soon, I expect to start seeing huge momentous candles. We still have 20 more minutes within this silver bullet because I don't want to be in a trade after the silver bullet. So we still have 15 more minutes. And I don't like how we're just seeing small candles forming. We're seeing this little consolidation, but that's fine. This consolidation could be just a little wrap up for a huge momentum down. This consolidation that's happening right here. It could be just a little, right here, right here, right here. This consolidation that you see happening here could be just a little wrap up. Okay, when you're about to sprint, when the sprinters are about to sprint, they will step back a few steps so they can pick up with speed. So this consolidation could be just that sprinter trying to sprint and stepping back to gain momentum and then launch forward. In this case, to launch downward. But let's see. Or it could be launching up against me. Bro, I told you the market doesn't owe us anything, but if the analysis is right, then it should be launching downward towards our target. So we're up to $200. We were up $1,800 in the first 10 minutes. We decided not to take that profit. We decided to stay around. We really thought the price was going to go down. We didn't think it was going to go up first and mess around before and refer to these areas before coming down. Eventually, at some point in the day or in a week, it's going to refer to these areas. But I didn't know it was going to happen right away. I thought it was going to go down, clear more liquidity, like this particular 1 hour liquidity that's sitting here. I thought it was going to come for it before going up to refer. However, the algorithm decided to go and refer to this area first, and maybe now it's taking that momentum down. But like I told you, we're expecting large candles now, large red candles to start forming, big red candles. I want to see what it does in this area right here. The reason why is because I'm looking at a, let's see here. It's not a breaker, but there is something I see here, and I expect that when the price reaches here, it should make a big jump, right? It should make a big downward drop right through here. That's what I'm expecting. So let's see what happens here. And the reason for that is because, this is the bottom part of a bullish order block. Boom, you see that? So I expected to drop heavily through here. Now we're up $400, $500. I expected to drop heavily through here, but it's taking longer than I expect. But it's probably going to drop. I expect big candles to run right through this particular area, in particular. This area. That's what I'm expecting. We're up $500. Let's see. We're looking at the higher time frame. 15 minute over here. Yeah. We expect continual downward movement. That's what we expect. I expected to drop right through here, but let's see. It doesn't have to, but I just expected to do that for a reason that I won't take the time to explain why right now, but that's because I'm looking at a potential breaker, a bearish breaker in this area. as it forms. So the price could drop right through here, form a fair value gap here, come back in this area, and then go down. Because of this, because I'm expecting that this is going to be an eventual break. It's a breaker already, pretty much. It's almost, the breaker is almost done forming. As soon as these next two candles maybe come down here, this is going to be effectively a breaker, a bearish breaker. So then I would expect the price to maybe, while it's coming through here with the form of a bearish fair value gap, come back into it and test it and retest it and then keep going down. That's what I expect, but we'll see. We're up $400. Nobody's panicking over $400. Most people will jump out after being up 400, 500. We were just up 1,800 in 10 minutes. We didn't get out. So I want to, like I said, I want to stay here for the whole thing. I want you to see the whole thing. So I'm looking forward to this downward movement continuing. I like how the price rejected in this area. I like how it came and referred to this order block here, this up here. I like how it did it. I just love how it did it. You know, it did it just like I said it was going to do, just like I predicted it was going to do. It came and referred to it, and it wicked right there, formed what you call a tortoise soup by taking out this liquidity right here, and then a rejection into that tortoise soup, and then you saw a big, you saw an initial bearish fair value gap, and an even bigger bearish fair value gap form, and then it just kept going down. I like how it happened. That was beautiful to watch. So we got another consolidation happening here. We're up $200. We got another consolidation happening in this general area. So I predicted, I expected a big candle going down, but that's not what's happening, right? It looks like it wants to go up, but this is just a general. We got a lot of wicking in this area, a lot of price movement back and forth. So let's see what happens. Let me move this circle out of here. You never know what the algorithm is going to do, but you just stick with your analysis and trust it. We have about 14 more minutes for until the silver bullet is complete. 14 more minutes. $14 more minutes until the silver bullet is actually complete. Okay, see your tortoise soup forming, a red candle tortoise soup, right there. Red candle tortoise soup. And I'm looking, you see, I keep looking towards this side because I'm looking at other monitors, just to be sure that we're on the same track. We're still on track. So this might be a bearish order block forming. Boom, those big red candles. It didn't form when I expected it, but it's forming now. Remember, we talked about the big red candles. Look to the left, we're up 500, now we're down. But yeah, so those big red candles are forming now that I predicted were going to form first, but then it just consolidated for a little bit. And let's see. It just might be a consolidation, man. But we got a first, we got a bearish order block there. And are we forming a propulsion block now? Let's see if this is a bearish propulsion block. We're going to find out now. Or it might just be an order block, and hopefully it's a fair value gap that's going to form in here. Like I said earlier, it'll probably be a fair value gap that will form in here, in this area. Because a breaker, I'm expecting that very soon when this goes below here, then it's a breaker. And then it will come back in to test that fair value gap and then go down. So it'll be a slower walk because we're getting later and later in the day. And so the price moves slower and slower. But slow but steady. We're up $400. I can get impatient right now and take $400 and walk away. Right? $500 we're up. But I was up. I know we're going to the $3,000 mark. I know we're going there. It will take a little longer, but we're going there. Okay? So let's just stick around. Because I really don't want to trade tomorrow. I tell you, if I hit the $3,000 a day, I'm not trading tomorrow. I'm just going to relax tomorrow. Get up in the morning, just chill, you know. Yeah, so Check some phone messages here. Okay, okay. So candles running through there. So essentially, this is going to become a breaker here very soon. I'm wondering where that fair value gap is going to form. I'm looking for a fair value gap within here, but I'm not seeing it. I want to see a fair value gap form because there's a breaker here. I want to see a fair value gap here so that the price can come back into it and test it and then run down towards that target that we have of $3,000. But let's watch and see. Let's just keep watching. Let's watch and see. This thing takes patience. So a lot of people would not want to come and learn this stuff. It's just going to change your life, man. It's going to change your life, okay? It takes patience. Oh, wrong thing I did. Well, okay, so we'll go with, well, this order block is acting different from what I expected, but that's that's okay. So we saw a candle came here, this green candle. So now it tested it, and it's going up, but it's just going to test more PDF. It's like maybe there's liquidity right here. It's going to come clear this liquidity, or it's going to form a turtle soup and keep going down. But the bias is going to go down. So I'm not nervous about that. Really not nervous about it. We're down again. We just up $500, $600. Now we're down again, right? So let's see what happens. We haven't seen the end of this run. No one's going to be scared here. This might take 2 hours, man. Because I could have been out in the first 10 minutes when we had that $9,000 or $1,900, but I didn't do it, and I don't regret it because I'm going to get to it. We're going to get to it. Let's just watch price action. We're going to get to it. So one thing that could happen, since we're in here, we're still in here. The silver bullet is about to end. We got 8 more minutes into this morning silver bullet, and then so we could see a consolidation after the silver bullet. All right, between that 11 o'clock and 12 o'clock Eastern time, because at 12 o'clock, you know, it's lunchtime in on the East Coast in New York. So you could see that happen. You could see that happen. You could see a consolidation, meaning I could be in just maybe $500 profit and just sticking around there. I could be in a $500, $1,000 loss, and it's just sticking in there. Nothing's happening because we're consolidating. But let's see if that's what's going to happen. So far, nothing really to tell me that this trade is going to go against me. Nothing. It's just taking longer. Let's go back to the 15-minute time frame and see what's happening. So that 15-minute candle came down. This one is going back up. It's a wick right here. What does it do with this wick? Does it pass the middle of that wick? You know, we're watching to see. There's another long wick right here that wicked all the way into that order block. What does it do with it? So pretty confident in a reversal. Might take longer. Maybe this wasn't the day to do a live video because it's long, but the trade is going to happen, and you're going to see the target hit, because although if you look at it, if you look at what's forming here, you would say that there is a bullish propulsion block on the 15 minute. And let's see what to deal with liquidity. Liquidity. Okay, 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 okay. So I see divergence. I see divergence. I see divergence. I see divergence. All right. So I'm looking at something on the 15 minute. Let me bring up the other two asset classes so you can see what I'm talking about. Because this could be something that telling me that we're gonna go up for the day. This is what I mean. I'm seeing divergence. You see over here, this low, and then it made a high here, and this low, right? Well, let me see, that's 2 p.m., 2 a.m. Where's 2 a.m. March 13th? It's 2 a.m. So we see those lows taken out, this low taken out here on the NASDAQ. But then if you come to the S&P 500, let's see, look at that's 2:15 a.m. March 13. What's March 13, 2:15 a.m.? March 13. Hold up, let's go like this. $7.20. What is that? 2:15 a.m. Okay, around here. So this is that, and then this one is. Well, hold up. No, I'm doing it. Okay. That's because I'm on the 1 minute. Let's go to the 15 minute over here, so we'll be able to see it perfect. Okay, nice. All right. There's something I'm trying to show you. I'm noticing a divergence happening. This is this is 2:15 right here. So if you look here, this is 2:15, and this is this one here, and this here, right? And then you come to the Dow Jones, 15 minute. All right. This is 15 minute on the Dow Jones. This is around your 250 markets. This general area here and here. Okay. What I was talking about when I say I saw divergence is, even though we're up 250 and it's been so long, I don't know if you're getting tired like me, but I'm getting tired, but I'm not leaving because I'm here for you. We made the money earlier and we stayed in, and so the market is just gyrating, referring to PD arrays. But what I said was divergence. Well, you see these other two circles, they were taken out here clearly on the NASDAQ. Over here, they were taken out by this third one somewhat, but not clearly, on the S&P 500. On the Dow Jones, it's still kind of evening out. It hasn't taken them. It took out this first one, but it hasn't taken out this second one. So now if it takes this second one out, then I will know that we'll keep going down. But if the Dow Jones fails to take this one out and starts to keep going up, then I know we have a divergence going up. But for now, that's not what's happening. So I just wanted to outline that. The reason why I looked at that, because I want to make sure that nothing different is happening, because things can happen. There could be a news event that could happen right now, like a war could break out somewhere, and boom, the market can just go against me heavily. So anything can happen. So you got to keep an eye on everything else while you're still in the trade. But I'm still sticking with my bias for the day that we're going to go down to that $3,000 mark or close to it. So that's what we're going to stick. That's what we're going to stick with. That's my story, and I'm sticking with it. Now we're up 500. We're about to be up $600. So no need to panic. Let's just keep watching price action. Okay. Just keep watching price action. Like I said, we were there. You saw it. We were there this morning. So it's not like, we hit that thing in 10 minutes. It was no time. So we're still moving. I wanted to see, let's see, back to this 5 minute. So let's see if it's still respecting this area. that I drew on a 15 minute for that breaker. No, it wasn't on a 15 minute. Actually, it was on a 1 minute that I drew the breaker. Yeah. Let's see what it does here. I like to see the red candles breaking through this particular breaker. Then I know I got more confidence. I like to see the red candles breaking through this breaker. That's what I want to see. And it looks like it's starting to happen now. All right? It's starting to happen. I like to see it breaking through this breaker because it's, folks, with all this gyration and all this movement back and forth, we're still seeing lower highs are being formed on a 15 minute, which is another indication that we are bearish. We're going down. See, we're still seeing lower highs. This high and then this, see, and then, you know, let me try to just do. So we've got this high up here and then this high is lower and this high is lower. This high is lower. And, you know, it formed kind of like a semi little high right here. It's lower. So we're still seeing lower highs. Okay, so no need to panic. No reason to panic, rather. No need, no reason. You just hang in there. That's what you do. You hang in there, you wait. We're also seeing longer wicks on the top of these candlesticks. I'm about to show you what I'm talking about on a 15 minute. You know, we're seeing longer wicks. Over here. See, the wicks are longer to the top than to the bottom. So a lot of resistance. Let me not use the regular talk about resistance, but there are a lot of the rejections are happening on the top, going to the bottom of these candles. We're watching price action. That's what we're watching. We've been in the trade. It's been over an hour now. Admittedly so, because we made the money in the first 10 minutes. You saw it. It was 1,800 plus. We didn't take it out because we wanted to stay in to make sure you see us get down to the 3,000 mark. It's still been in over an hour. It's been a little over an hour now, and that's fine. We got in the trade. We got in the trade around 9:50, so it's about 10 minutes past an hour. So it's been about an hour, 10 minutes. I wouldn't be in a trade this long. I'm only in it this long because of you. Because I could have been with the first about 10. I got in about 9:50, so by 10 o'clock I would have been out with $1,800. So it's all good. All good, all good. We're just watching price action. Let's drop back down to the 5 minutes. See what happens here. Still seeing lower highs form, lower highs. But if you notice, it's still respecting this particular area. See, these are some of the reasons why, you know, you have to know about these PD arrays. And this is just really, if you look at it, it's just if it's a 5 minute wick, and the middle of this wick is still being respected, even though this is actually, this 5 minute wick is the same as a rejection. I mean, a breaker on a 1 minute. But look, nothing has passed the middle of this particular box. Only wicks. So it's still respecting it. So it's a consolidation. We talked about that consolidation. Now we're out of the silver bullet, folks. We're out of the silver bullet. The 10 o'clock to 11 o'clock run. Now it's 11:03. I would never stay in a trade outside of the silver bullet if I was trading the silver bullet. I got to be out, in and out within that hour. But I'm in here now because I didn't take my big money when I made it this morning in 10 minutes because of you. I didn't take that money, okay? And I stayed in because I wanted you to see the end of it, but the market decided, no, we're going up for a little bit. So that's why I'm still here. And I don't regret it. you know, I don't regret it. I did it because I hope people are learning based on that. Because I explained to you what the price was doing and it did it, right? I told you it was going to come in this particular area, in this general area here, you know, admonish this particular 15-minute bearish order block and then keep going down. And it did that. But let's see. Let's just see. And the candles that are forming are smaller. As you can see, they're smaller and smaller. That means that in New York, in about an hour, they will be going to lunch. And that's a bad time to be in the market because people are at lunch on Wall Street. So nobody's doing anything. So the market just gets slower. So if at lunchtime, if you're in negative, you're going to be in negative. You got to wait for them to come back for the market to move because you'll just be in negative because it's just going to be a consolidation. Nothing much is going to happen. Right now, as you can see, the price is just going sideways. It's just consolidating. Okay. But at some point, we expect a revolution. There's going to be a revolution in either direction. There's going to be a revolution. So I'm just drawing this line. This is where that consolidation is happening. Watch the consolidation. Yeah. Look at those candles that are forming. They're small and small and small. Nothing really happening right now. All right, that's cool. So there is a little order block right here, a bearish order block. We're looking to see how the candle acts within this order block right here. Let's see. Let me see how the. Okay, then there is an order block, and there was rejection in that order block. I want to see how these candles act. But we're in a consolidation right now. So we're in a consolidation. It's after 11 o'clock. It's going to be a movement, but it's going to be slow movement. It's not going to be like when the market first opened. When I got in that trade, you saw how it went to the $1,000, 1,800 in like less than 10 minutes. You're not going to see that because now it's getting later and later in the day, so things are getting slower and slower. But I'm really interested to still see what the price does with this box right here that I drew. Because that's very important to know what the price is going to do with that box. See this red candle forming down here, but it's just still consolidation. We're up 100, up $200. I want to see if it's really going to run through here, because that's what I expect, to be honest with you. I know that it's not done coming. Actually, right here, there's liquidity also right here, right here. That's liquidity. This is a place the price will normally want to come to. Now we're up $300. So we've been in the market here for a while, folks. We're up 400. I want to see what does it do here. I like to see a candle body, not just a wick, but a candle body close below this white dotted line within this box. Then I would know that okay, we're going down. We're up $500. Bro, listen, I'm really tired. $500? It's not bad money at all. I can take that and walk away right now, but almost up 600. About to be up 600. But I mean, still in here for you. Okay, so we see the fresh candle body that's already closed below that. So that's a good sign. That's a good sign. Let's see what this next candle does. This next 1 minute candle. We're up $600. I'm getting nervous. I mean, not nervous, right? I'm getting fed up. I'm getting fed up. I'm still. I'm still. Hello? Hold up. Sorry there, I got a call I had to take. So we're up $700. I believe that we're gonna come and we're gonna do something here. We're up $700, 800. So I'm happy that the price I saw. Remember, I told you I was expecting candles to run through this. It didn't happen here. It didn't happen here, but now it's happening. Like I said, the market chooses when it wants to do it. So now this white circle, I'm taking it out. The consolidation has been broken through, so we're taking it out. And just watch and see. Is it going to try to come down to this new line I just drew here? This area I said that is a liquidity. Is it going to come here? I expect that it's going to come there. It'll at least take us over the $1,000 mark, and I'll probably get out. I'm not going to wait for it. Trust me, it's going to come down to this $3,000 mark. Now, the way it comes to this line, if it comes there with momentum, I'll remain in to watch to see it at least come to these pink dotted lines, which was a wick on a 15-minute. I think it was a 15-minute candle. It was a wick. So the middle of a wick. So I'll wait and see. Okay. Let's see what happens. So we're up $800. This still some good money. It's not bad money, but we're looking at a target of $3,000 something dollars. So it's like, okay, 800. See what happens here. So remember, I told you when I was looking for a fair value gap to form when it enters this breaker. I was looking for a fair value gap to form so the price can come back in, test it, and go back down. Well, this is that fair value gap. I'm going to remove the breaker. Okay, this is the breaker. Or actually, I'll keep it there and just make it real thin. Let's make that breaker real thin. Okay, you can almost, yes, you can still see it. So let's make it thin. And then if you've been paying attention, you'll still be able to see it. So this is that breaker. Okay, we're making it real thin. Now this is here is that fair value gap I was talking about right here. It formed right in that breaker like I predicted, like I was hoping was going to happen. So that's that fair value gap that formed. All right, it formed within it. So I expect the price to either come and test it, or just go do something different. I mean, come in it heavy or turn back around. Okay, so let's form this fair value gap. This is that fair value gap that forms. See that red area? It's happening in real time, folks. Just like I said, it took longer. I'm going to admit it took longer, but it's happening. It's happening in real time. Let's not stress it. Let's relax. Okay? We're already on the right path. We're already on the right path. So let's just hang in there. We're up $700, $800. Let's see how this is. Like I told you, it was going to be a slower movement compared to when the market first opened. It'll be a slower movement. We're up $800. How many people will be up $800 in about an hour? Because it's probably been an hour, 20 minutes now. You'll be happy with that. Some people got to work 2-3 days to make that. So 2-3 days of 8 hours to make that. We just made that in about under an hour, 20 minutes. Now we're up $1,000. I can still get out right now. It's $1,000. I can be like, because I've been sitting here too long. Usually, when I made the first $1,800, when you saw that happen, that was within the first 10 minutes. But I stayed in for you. Maybe God is getting ready to pay me now because I stayed in for you. For those of you that want to see me fail, you're not going to see that happen this morning. I don't think God likes that, and that's not going to happen. You're going to see me win again, because that's what God does to people with good heart who just want to help other people. Okay? He protects you. So, but what's amazing about this thing is when you go back and watch this live, you will see how I talked you through every step of the way. I talked you through how we're going to go to the profit. You saw us go into it. We're almost there, and the market reversed and went back up, and we were in a big hole. We're down $1,600, right? And I talked you through what the price was doing, why we were down. Why is it that we're down? I told you what the price was trying to accomplish, and it did that. I told you it was going to come either test, either retest. We don't want to call it retest. The algorithm was going to refer to this right here, or it was going to come and just refer to this area, and that's what it did. It passed through here. It came and referred to this and started going back down. So, look, this is money. I can get out right now, but our initial target, because I still believe, though, if you really look at a higher time frame, I still believe that we're coming down. We're coming down. So, you know, I would at least maybe be more reasonable to say, rather than keeping the profit where it is, because it's going to take a longer time for the price to reach it, because the reason is very simple. You can see that the candlesticks are forming or weaker and weaker, even though it's going down in our direction, but it's weaker and weaker. So it's going to take a longer time. So I could say, but this is one area I know it's going to come to right here for sure. This liquidity is going to want to come and clear it. So I can move my target here and say, okay, I will get out of the market when I get to $1,734, which is right here, right? But let's see how it acts. If we continue to see weaker and weaker candles, now we're up $1,000. If you look here, almost 1,200. If it continues to be this weak, I will walk away with 1,200 in about an hour and a half. That took a longer time to make, but it takes normally in this particular great country, the greatest country on earth, America. Okay, it's taking people, even people with good careers, it's taking them at least 2 days of 8-hour shifts. So that means they got to work 16 hours to make that. And if I walk away with $1,000, that would mean that I made that in an hour and a half. It's still not bad. But remember, it took long for me to get to it because I made 1,800 first, but I didn't take it out. I didn't get out the market because of you. I wanted you to see some stuff. So I'm watching to see what happens. So I'm going to move my target back down to the original spot that I had it. Or let's just keep it here where the wick is, which is $2,500, right? Let's keep it there and see what happens. Give me 1 second. I'll be right back. All right. So we're down to 900, down to 800, down to 900. But it doesn't matter. I just feel like this bearish momentum cannot be overrun. We're just gonna keep going down. So the target, not our new target, we took it from 3,000 to 2,500. Only because I told you, because of patience, because of time. Right now we're up $900. This is real money. I can walk away from here right now. Okay, but let's not do that. Let's just hang around and see what happens, man. Let's just hang around and see what happens. It's going to be a slow movement, very slow movement into the money. But that's because nothing good comes easy. See slow candlesticks forming here. It's very slow. These is going back and forth. We see a little that candle is trying to turn bearish. There's a small little bearish order block right in here. I'm not gonna bore you with all of these. Let me enlarge this so you can really see. There's a small little bearish order block right in here. Right here. Small bearish order block. Let me highlight that for you to see. Right here, this second red area. Let me turn that to another color. Maybe let's make that yellow so it can look different. Yeah, so there's a small bearish order block right in there. Let's see how the price acts in that bearish order block. Let's make that order block a little thin. There we go. So it can be very good for the eyes. Let's make the middle line maybe green, a different color, a blue. So we can not blue. We got too many blues on the chart. Let's make it red. Yeah. So we can have it distinguished. But it's a slow run down to the money. We're up $900. We've been up 1,900 for almost 5 minutes now. Let's see how many candles are here. 1, 2, 3, 4, 5, 6, 7, 8. So for the last 9 minutes, we've been up $1,000, 900 between 1,900 for the last 9 minutes. Um, Nobody's panicking here. No one's panicking. I guarantee you. You know. So as you can see, folks, you know now that it's going to take at least another hour for this price to get down to that 3,000 mark that I had. So I moved it back up here to 2,500. But even with the way the candle is moving, it's still going to take a while. So, and I'm running out of patience. So this liquidity zone right here, see this line moving back and forth? That's liquidity, okay? Money is sitting below here. The algorithm is going to want to come here and take some of that money. So I could move my target up here as well and say, let's settle for $1,700, all in less than 2 hours. But we're going to wait and see. We're still between the 11 o'clock and 12 o'clock mark. Let's wait and see. 12 o'clock is launch time, so we don't want to be in this thing when it's launch time. It's not good. I'm noticing something with these candlesticks though, which I may get out of here because if it continues, because it's going to just take a while. It's probably going to go back up and come back down. It's going to take forever. If you notice, what I'm noticing is this, right? You're noticing that the lows of all of these candles are higher than each other. So this is a bullish order block, but none of these candles are coming lower than the previous one. Even this one that's forming right now. Okay, it just came lower than this one. But I'd like to see it much, much lower because we have a bullish order block right here. And if this thing is trying to respect this bullish order block for the next 5 minutes, I'm going to get out at $900 or $1,000 because it's going to happen. It's going to come down to the target, but it's just going to take too long to do. But my opinion is that this yellow area, which is a bearish order block, my opinion would be that the price is respecting it. So as you can see, the next candle that's forming is forming lower than the previous red candle. Good. I like what I see. So we're going down. But if you were going to keep going up doing that stuff it was just doing, it's going to go down, but it's going to take too long. I'm running out of patience, bro. I'm not trying to do that. So yeah. Yeah, to sit here for more than 2 hours. Although the money that we're making is what people work 8 hours a day for 3, 4, 5 days to make. But still. When I had my first 1,800 in the first 10 minutes, I stayed in because of you. I'm running out of patience, bro. I'm running out of patience. I gotta go. So we're up $1,000. Let me bring my target margin here. I think, let's bring it to 1,700. And if this candle closes below here heavily, I will bring it back down to the $2,500 mark. Okay. And expect that we're going down. So let me bring it back. Let me just bring it back because I don't want it to take me out when we make 1,700. Then it takes me out. I want more because I've been sitting here for a while this morning because of you. So let me take it back down to the $2,500 because as you can see, it's moving down here with heavy momentum. It's already burst through this bullish order block. So it's disrespected it, but it highly respected this small little bearish order block. It respected it. It didn't even touch the middle. You see the red dotted line? That's the main threshold of that bearish order block. It didn't disrespect it. Let me move this from here. Because we got two order blocks now that we can refer to. We got a fair value gap in the order block here that we can refer to. So we don't need that one that was in the middle. So yeah, we're making a slow movement towards the bottom. But no, don't get me wrong. If it keeps dropping slow like this, I may get out at 1,700, 1,800. That should be good. But it's going down now. We're up almost 1,200. But the new target, because we took it from this yellow line, which was 3,000 plus, because we don't have the patience to sit here all day. We took it from there up to this pink dotted line, which is another PD array. This is a Fibonacci that gave me the middle of a wick on a higher time frame. Let me see which time frame that was. I think it was the 15 minute. Was it a 15 minute or was it a 1 hour? Let's see. Yep, it was the 1 hour. So you see here, the wick right here. This long wick down here. I took the middle. That's what that pink. Everything you see on this chart, it has a reason, okay? Every line you see. So the pink dotted area was the middle of this wick. which is the main threshold of the wick. That's another PD array, ICT PD array, meaning spots that you look for for actions to happen. So that's why I drew that pink line. So let's drop back down to the 1 minute. Boom, back down to the 1 minute. $900. Yeah, too much consolidation, and especially given the fact that we're getting ready to go to lunch in New York, 12 o'clock. You don't want to be in the market during lunchtime. You don't. So we're just watching to see what happens, man. I don't care even if I walk away with $800 or $900. That's fine, but because I'm getting fed up and tired. But as you can see here, though, the price is still respecting this order block. See how it's acting here? See this candle wick right in here? It hasn't, nothing major has happened to this order block. It's still respecting it. Even the middle of this order block, which is the main threshold, these pink lines, this red dotted line, is still being respected. But we've been up between $800 and $1,200 for the last 10 minutes, 10 to 12 minutes. We've been up. That's a lot of money. You know, some people working 2, 3, 4, 5 days of 8-hour shifts just to make that. So we've been up. It's still less than an hour and a half. All right. But I'm really getting impatient. So, okay. So see, it's going back heavily now. It already disrespected the middle of this order block. I'm getting impatient. When we go back down to $1,000, I'm going to get out. Okay. Which is easy. Getting back down to $1,000 is easy. But we see a wick within that, the main threshold of that order block. The middle of that order block, we see a wick. When we get back down to $1,000, I'm getting out. Okay. Now we are down. We're up to $1,000 now. Should I get out now, like I said I was going to? Should I be a man of my word? No, because I saw a wick form, a long wick, not a long wick, but a big red candle form. Now we're up 1,000, almost 1,200. So I don't want to get out. And 2 minutes later, this thing hit that target. That I was okay. See what's happening here? Let me move it up here to 1,700. Let's see what happens, man. Let's just see what happens, okay? I'm getting fed up. I'm getting just tired, bro. And I know the price is gonna go here to this heavy money, but the time, you see how it's just painful. It's painful, man. Who wants to go through pain and agony just to make a lot more money in less than 2 hours than people will have to work a whole week and a half to make? That's the irony of it right there. I'm just being sarcastic. It's a grace of God. Now we're up $1,300. So we're gonna go to that mark. See, big candles forming. Should I move the profit back down to the $2,500 mark, right to that wick that measures up the middle of that 1 hour, the middle of that 1 hour wick? Let's take it back down, 2,500. Let's see, because look what the candle is doing. It's forming heavy. So I'll keep the profit down here at the $2,500 mark. And when it comes down here, which it will come down here to this liquidity, now we're up 1,500. I can move out right now. But if it comes here heavily and keeps going down, then we're going to go for the 2,500, okay? Because as you can see, it just takes a short time for all this thing to happen. And it's only 11:27, so we're still kind of far away from lunch before the market starts to consolidate and go slower. So we're not going to be nervous. Share this particular aspect of the video, folks, because we're about to jump into the money. And watch this. We're up 1,400, 1,500. And we're seeing big momentous candles. Just like I told you, you see that yellow box that I formed? That was that last tiny little bearish order block, and it's been heavily respected. The big green candle formed and turned back to red, and it was only a wick in the middle of that order block. Watch this, folks. Watch this. Watch this. We're at 1,500. We're going for the $2,500. All right, let's see what happens. Let's see what happens. Am I man enough to hang in here? We're about to find out. We're about to find out. We are about to find out. All right. This can change your life. You know, young folks in Liberia who, you know, you walk around the whole day, you give excuses how the country is hard and this and that. But when you see these kinds of opportunities, you don't make use of it. You rather run behind politicians and beating drum, and you complain the country is hard. People in young folks in other countries are making use of this opportunity and changing their lives. But you want to sit down the whole day and just do this foolishness and complain all day that the country is hard. But this stuff that I'm teaching for free, most of you not even under here because you're going to watch something stupid that's not going to add any value to your life. It's just going to make your life, you're going for entertainment rather than actual something that's going to cause impact on your life. That's why a lot of you are not here right now. Because you go and follow people who are losers. They sit out in America, they make big moves, they do live talk shows. They're adding no value to your life, but those are the people you pay attention to because they make loud noises. You're watching this particular thing. You can make more money than the ministers that you're beating drum behind. You can make more money than they do in a month. You can make it in a day by just learning this. You can make that in a day. And now after that, you look at your minister and say, well, what's this? Who's the other one? But you don't want to do it. You're too lazy. Most of the Liberian young people, you guys are very lazy. Extremely lazy. You make excuses. You want to live this big life. When someone else comes from Liberia from America to Liberia, you dress up more than us that coming from America. You're very lazy. But because this is something that you should have 5,000 people watching right now. 5,000 young people. But guess what? Later on, you're going to go watch stupid shows that will add no value to your life, but just give you information that will just make you poorer and poorer in your mind. I'm sorry, I had to lash out at you because this is crazy. Like the level of laziness in Liberia among the young people is nauseating. You make all these excuses. This is money. This brings dignity to your life. That you don't have to jump behind somebody and beat drum, another human being, right? It brings dignity to you. You earn your own money on your own time in a more respectful way, more than the people you're beating drum behind. Look, I've been up $1,200 for the last 5 minutes. I could walk away right now. How much can $5,200 do for some of you in Liberia right now? What life-changing event would this money cause for you? But you're not going to be patient to learn this kind of stuff because you want to follow noise. Who's on Facebook, on the Liberia social media space right now that's teaching this kind of value? Who? Nobody. They're bringing politics, I'm into politics as well. I support President Weah, and we're going to start a podcast here on another, maybe you should go check out the page. It's called Politics with Bala and Basiga. It's a page, a Facebook page. Go start getting familiar because in the next month or so, we're going to start a live podcast because we support President Weah, so we're going to talk about him. But I'm also telling you that the same guy who will be doing that is here bringing value to you that can change your life, your family's life in Liberia. You don't have to be calling people in America. But this same money I'm making, you could be making it in Liberia. So that means you're making more money than people even here in America. But you're too damn lazy. Like you just want to walk around, make noise, wear expensive things that you can't even afford. And you got to think outside the box. Other young people in other African countries are doing this trading. I know some young kids in Kenya. They're killing it in Ghana. But you in Liberia, you just sit around. This is where you need to gather on a live podcast like this. I've taken the last hour and a half I've been here of my precious time. I could have just traded secretly and walked away. But I'm here to share this information with you so you can change your life. Look, we're up $1,300. I'm literally determining how much I want to make. Which of your ministers can determine how much they want to make? They got to go steal. And even at that, you can still make more money within 2-3 days than they make in a month. Than they steal in a month. Young people, this is for you. Just share this video. You guys need to come to things that change people's lives. When you go to serious countries like America or these other serious countries around the world, these are the kind of live podcasts that the people gather on. Not on majority black say they wanted things that would not change your life. You're looking at stupid people in the House of Representatives being very childish, and that's what you pay attention to. This is something that can change your life. So you come here, you learn these kinds of things, you share these kinds of live videos so people can come and change their lives. So, despite, even though I'm very much committed to President Weah and that's my choice and I feel like he's the best choice for us, but it's out of mutual consent, all right? Because I will hope to bring value to him, to whatever, if he becomes president again, which we know he will, to be able to add value rather than being a liability to him. That's how you want to come towards your politicians, right? So this is just the way, you got to bring value to yourself first so people can see value in you. Then you can add value to that person. All right, let's keep watching price action. We're back, we're down 900 for a while, but I know what's happening here. I'm seeing that we're still far away from lunch. It's just 11:33. Like, I don't want to be in the market anywhere around at lunchtime in New York because that's bad. So we see that, this long wick is formed. It's forming to be another bearish candlestick. I could have gotten out when we're just so we're at 1,500. I didn't get out because I have this target right here. But I don't have to wait for it, right? I can get out now because I'm really getting tired and walk away with $1,000. But the ultimate target that I have down here is $2,500 right here. As you can see, this green line that I'm moving back and forth. Or I can move it up here and say my new target is going to be $1,600. But let's just be patient, okay? Let's move it back to the $2,500 mark and see what happens. But yeah, I mean, I had to lash out just now because you guys are lazy in Liberia and you don't know that, but you are lazy. The young people, you are very, very lazy. And you got big heads, but you don't want to put in the work. You can have big dreams, but you don't even know what it takes to work to bring that dream to reality. Like, the irony of it all. Like, you want this big stuff. You know how long it's been, as I work in a healthcare field in America, okay? A very prestigious career I have. But it took me a year and a half of dedication. For the last year and a half, I've committed at least 6 hours a day to learning this particular skill set. So don't think you see me doing it, you'll be able to do it in 1 month. Because if you think you're just going to do it 1 month, you're lying to yourself. It will take time and dedication. I didn't have to do that. I got a nice career in America. I'm not suffering, but I wanted more latitude in my life, more freedom, more time freedom, not to have to go on somebody's clock and all that stuff, to do my own thing and then build businesses from my own thing, not from money that somebody else paid me. So these are the things I was thinking. So what I did was I committed my time for the last year and a half. You've been seeing some of us traveling, but we've been doing this. We've been traveling, but we've been dedicating to this skill set. All right, so we're 1,400, 1,500. Okay, we're 1,600. It's gonna hit this target. Man, listen, I'm gonna get out at 1,800. This candle, either this candle or the next 1 or 2 candles is gonna take me out. And so look here, this is the new target, 1,800. I took it from the 2,500 mark because I don't want to sit here too long. Now we're 1,600. We're up 1,600. I can still get out 1,600. I can just click that button, boom, and take $1,600 and walk away with under 2 hours. But I still see a lot of momentum going. I know we're going towards this mark right here, this particular gray line. So let's just wait and see if we can hit that 1,800. We're about to hit it here, either here or the next candle. It'll be 1,846. Boom, 1,846. And just like that, folks, with under an hour and a half, we walked away with $1,846. Now remember, my original target was here, right? This pink line, it was 2,500. You see the price is still going towards it. If I had just stayed in and not moved my target, it's going towards the 2,000. So I would stay here, even though I'm done. The price just took me out at 1,800. So I made 1,800 in under 1 hour, 1 hour, 30 minutes. Now you see it's going to where I had the 2,000. I just had to be a little patient. It's going towards the $2,500 mark. So I would have made $2,500 if I had just waited. So we're gonna wait and see. Just watch to see how the price acts towards this pink dotted area. Let's watch and see. So just tell yourself, even though I only made 1,800, but Bala actually made 2,500 because I got out early. So let's watch and see. So even now, even though it's still going down, this thing is gonna hit the 2,500. I'm so freaking pissed why I got off just now because I was getting impatient. I've been here for an hour and a half. So it's okay. But I'm so freaking pissed. I could have waited for the $2,500 because it's going to go down. But even where the price is right now, right? Because remember the 1,800 that I just won was right here. So between here and here, that's about another 400-500. So I would have been up about 2,000, maybe. Maybe I would have been up about 2,300 by now. If I was still in, I would have been up 2,300. But it doesn't matter, But I just want you to see this stuff for yourself. So young people, free yourself, man. Free yourself. Stop following foolishness that's not going to change your life. And in Liberia, you guys just complain all day. Oh, they play hard. What, they play hard? You just want big life. You're not focusing on what it takes to get to the life you want to live, but you just want to live that life. So watch, it's going down to the $2,500 mark. Watch. It's going there. Look. Now I am livid, meaning I'm freaking pissed that I didn't stay in to make the 2,000. Look, it's going towards it, bro. It's going to hit this area. And it's trying to do it before lunch, before the market starts to consolidate. That's why you see it moving fast like this. That's what it's trying to do. So another thing I could do if I still want to eat, right? I can increase I can take a lot of contracts right here and get back in just to ride it to this area. So let me do that. Boom, I'm back in. Just to ride it, okay, to this area. And if I ride it to this area, it will be $200. I will win. All right. So I'm back in the market. You see right here, I'm down $108, but that's not it. Trust me, it's coming here. It damn well is coming down here. So let me increase it a little bit to at least 300. So we add another 300. So I'm back in. I'm back in the trade. So it will be 300 plus 1,800. That will be about a 2,100, 2,200. So that's fine. So let's see. See, I'm back in. I got back in. I traded 6 contracts to come back in. Now this thing could turn around and just go back against me. But that's not what's going to happen, man. There's that momentum. I'm looking at the higher time frame. Okay. I'm back in. I shouldn't have gotten back in. Don't trade like that. When you make your money, you get out. So I'm down 200, down 300. But we see that momentum going down. There is a fair value gap that just formed right here. Let me hold up 1 second. Let me take out this liquidity. Let's just deal with the clean price action. So there is a fair value gap that just formed right here. Let's see what happens there. But we got back in for another 300 because we're seeing that momentum going down. But let's see what happens, okay? Is the market going to punish us for doing that? I don't think so. We have a bearish momentum. We made our analysis earlier, and we saw that it happened. So we're going down. We're going down. So we're going to add just another $300 to the $1,846 we just won and see what happens. So we have to see big candles. Big candles got to keep forming. Big red candles. So it'll be $1,846 plus $310. So that will be $2,156 if we hit that target. And I'm not going to move it now. I'm going to leave it. If you notice, I put it below the actual target because if it comes there, it's going to come with heavy force and it will just boom, it will run through it. Remember, this is the on a 1 hour, this is just a wick. So we're expecting the price to come to this wick on our 1 hour. This 1 hour candle, we're expecting it to drop towards this wick. That's why I got in to take $310 more. Okay, we're expecting it to come down to this wick. So it will be $2,156 that we would have won this morning. We'll say within under, let's say 1 hour, 40 minutes. $2,156, not bad. We already had the $1,800 win. So I just got back in just so you can see something. And really, to be honest, this candlestick is coming down to this yellow line, but we're not going to stay in that long. So let's just go back to the 1 minute and see. I want us to watch it in real time as the market hits that target that we have, okay? I believe it's going to hit it. I don't believe it's not going to hit it. I believe it's going to come down before lunch. We have about another 18 minutes to lunch. So this $300 mark, we're going to hit that. Keep going. Let's keep going. All right. So saying we're down. Let's see what happens. Let's see what happens. Is it reversing? Is it not going to come down here? Because we're down $100. I can just get out there. I don't want to lose too much. Look what happened. We're down 300. I shouldn't have gotten it. You got to be. See, down 600. Just like that. Just like that. Because I got back in the trade. Down 300. But I think it was just a no, that's not good. We just won 1,800. Now we've given $400 back to the market, but we haven't given it back because we didn't get out. If I get out here, then that's what we're going to lose. Whoa, this thing is turning back around. The algorithm is turning around. Down 500. That's a good lesson here, guys. Very good lesson. So if I got out now, that means we only won 1,200. I can still get out here. We're still going to be in net positive for the day. I could still get out here and we're still be in net positive for the day. Let me just get out here, okay? It's jumping back. See the lesson? If I got out here, we're still in net positive. It disrespected this area. Big time. Oh, my battery power, losing battery power. Losing battery power. Wow. See how fast that thing turned around on us? But it's okay. It's still a bearish day, so it could have been just coming to test this area and start going back down. So if we go down to like $300 negative, then I'll get out. So that means we only would have made 1,500, which is not bad either. So if we go down to like 300, 400 even, then I'll get out. All right, but it's still a bearish day, so it's a bearish day. That's why I took that trade, because I saw that target as a possibility, and that's why I took that trade. All these big candles that are forming, these big green candles, really nothing is not really telling me much. It was just a what do you call it, a hyper run, something to just scare people out, but it came out and clear liquidity. That's what it did. It ran back up to clear liquidity. So it's nothing to say, oh man, you were wrong by getting in, because it's a bearish day overall. Then this is just one, what you call it, 1 minute time frame. So let's say we're down 800, but let's see. I expect it to come back down in this area. I expect it to at least come back down in this area, which will reduce our negative. Yeah, I expect it to come back down in that area. As you see, it's turning back down. Valeu? Can you get, oh, that's okay, I got water. That's okay, I got water. So we're on the down 600 now. We're on the down 600. So remember, we just won $1,846. So even if I were to get out at the negative 600, that means we would have won for the day 1,200. But we're not doing that. See what I told you? The reversal is happening. It's going back down. Once it takes us back to a positive, I'm not going to wait for it to hit the 300. I'm just going to get out, man, because that would be too much sitting here. So let's see what happens. Even right now, we still, though you see negative here, but we're still in an overall daily positive because we just got 1,800. So put it this way: if I get out of the market, if right now, right, why it says negative, even if we go up to a negative 1,700 and I got out, that means we won $100 today, right? So it's still an overall positive, but that's not what we're gonna do though. We're gonna watch. I still see a bearish potential. That was a wick, long green wick, and then that formed, rejected into that wick, and then we see. Let's see what this candlestick does. All right, let me show you the higher time frame of 15 minutes. See what's happening there. All right, a doji, a big wick, a body, and then wick, two long wicks on both sides. Let's go back to the 1 minute. I'm surprised that the battery life on this camera is still going. That's a really good battery. We're about to hit that lunchtime consolidation, brother. I don't want to be in this market for that. So let's watch and see what happens. So even if I were to get out right now at negative $700, That means today we would have won $1,100 because we already up by 1,846. So if I got out now, we would have won $1,100. The one thing I don't want to do is to be in this market for the New York lunch. That's gonna hurt because there's gonna be a consolidation that's just gonna be long. Okay, so I'm just watching. Let's watch see how the price of these candles act for these last couple of minutes. It said we're down $1,000. Let's see. I saw a proportion black form here, so that's I'm seeing too many indicators of a bullish run. I saw a proportion black. If our negative is too big, I'm staying in. We're gonna see the end of this. We're still up $1,000 right now, even though it says negative 900, but we're technically up $1,000. I mean, we're up about 900, yeah. So I expect a reversal though. Lesson learned. Lesson learned. Take your profit and walk away, but I saw the potential, and that's why I got back in. That's another lesson. We're all learning. I told you I'm learning this stuff. Let's see how these happen because it looks like I'm just looking at proportion. These red candles bodies are closing higher than the other ones. Okay, so this red candlestick giving me hope that we may reverse to go down because at least it came a little lower than this other red candle. But let's see if it comes lower than even this first red candle right here. Because if it does, but if it keeps going like this, then we just forming propulsion blocks, bearish propulsion blocks. That's not a good sign for me. That's not a good sign for me if it keeps doing that. All right. And that was a macro. So we're in what we call a macro right now. So within this next 10-minute interval, 20-minute interval, whatever the price does is probably what it's going to do for the next 1 hour. So from here to here, 12:10. That's your macro. So let's watch and see what the price does within this particular line I just drew. Because whatever the price decides to do within this line is what it's going to do for the next 1 or 2 hours. If it decides to go up or if it decides to go down. I don't know if you can hear me now, but the microphone what I'm using for power just got missing. But look, okay, we're going down. I'm not gonna put back the mic on so we're going down to the profit, y'all. We're going down to that, and like I said, we already took the $1,800 already, but I was just trying to be greedy and I got in here, so I can still get out right here with this $97 negative, but we should be an overall $1,700 positive profit that we're walking away with. But that's not what I'm going to do, because this bullish fair value gap just got heavily disrespected. The price just ran through it, so I expect it to keep going down. It just got disrespected, even though this candle is not done forming, but this is a disrespect that it just went through it like that. Well, let's see what happens. If it's just going to be a wick that's going to at the end of this candle, or if it's just going to be a wick at the bottom, or it's going to be an actual full body candle at the bottom. Okay, so it's a full body candle that closed below the consequent encroachment of that fair value gap. Now let's watch and see what this next candle does. If it's a set of momentum to the downward movement. So we can just come and lick this little quick $300 and just walk away, and then we added $310 to the 1,846 we just won. That will be the overall profit for the day. Valeu. Oh, my daughter's singing. So let's see what happens. Let's see what happens. Let's see what happens. It's still dancing in this fair value gap. It hasn't gone below it yet, but I expect it to go below it. It's a bullish fair value gap. I expect it to be disrespected in a big way. So we're down $200, and the $200 you're looking at, we're not really down $200. Like I told you, we already took $1,800 out of the market. So being down 200 now, if you subtract the 200 from 1,800, that means we walking away with 1,600. But that's not what's going to happen though. It's going to reverse. It's going to reverse. Now I've been here for almost 2 hours, so I'm going to take the profit that I already have is 1,846. Now if I were to get out now, okay, it'll be 1,846 minus $300. That's what we're going to walk away with. But that's not where it's going to stop. This thing is still going down, because our overall bias for today, we said that it was going to be bearish, meaning a downward movement. So let's see what happens. Let's see what these candlesticks do. Let's see what it do. A lot of consolidation within this fair value gap. A lot of, meaning the price spending too much time in this fair value gap, in this bullish fair value gap. It's spending too much time. Usually it runs through the fair value gaps. It's spending too much time in this fair value gap. But that's, yeah, now we're like a few seconds away from the New York launch, and I did not want to be in the market when the New York launch starts, because usually the New York launch, when it starts, the market dies down, and wherever you are is where you are. So if you're in a negative, it's a negative. But we're not in a negative, mind you. It says negative 106, but this is just, if you subtract 106 from 1,846, that would be about 1,006 something. That's what we would have, or 1,007 something rather, and that's what we would have won for the day. But I think very shortly here, we're already in the New York launch. It's 12 p.m. New York time, but still I think we're gonna go down. It's gonna make the market is still gonna make a little more movement. It's not just gonna slow down right away, right at 12 o'clock, but it's gonna make a little more movement. And the direction in which it's gonna make the movement is the direction it was going in the first place. That's where it should continue to go. So it should keep going down. Let's come to this $300 mark or close to it, and we get out. I need to go run some errands. So let's see here. So we're in the New York launch now. We're in the New York launch. So you expect to see consolidation of candlesticks. Slower movement. All right. I don't like how these candles are forming now. You see the consolidation starting. See what I told you about? Once you hit the New York launch, the market slows down. So if you're in negative, you're in our negative. But we're not in negative. You're looking at negative one something here, but that's not where we're in. Our overall, if you've been watching it live, about 20 minutes ago, we took $1,800 out of the market. So even if I close this trade right now at negative 190 something, you just subtract that from the 1,846, and that's what we won for the day. Okay, so we're not in a negative per se for the overall daily. But yeah, just like I told you, New York launch. Now you're not going to see much happening. And in the next 5 minutes, I set my alarm. Not even the next 5 minutes. The next 3 minutes, I'm going to get out of this trade, regardless of what it is. And we're going towards positive on our end. Okay, there we go. I'm going to get out of it. You see, the price doesn't want to close outside of this fair value gap. It's only waking outside of it. That's what happens. That's classic consolidation and New York launch and things slowing down. Not a lot of movement. Classic consolidation. Waking back and forth, but it's just in this fair value gap. It's not doing anything. So I'm getting fed up. But that's what's going to happen. That's why I told you a while ago that's what's going to happen. And that's what's happening. So I'm okay with just $1,600, $1,500 if I got out now. I think I'm going to get out now. I don't want to be in a deep hole, deep into New York launch. This thing retraces to 300, I'm getting out, which will make our overall daily profit about 1,500 instead of 1,800. Okay, it's about 300. I think I'm gonna get out here. Okay, yeah, I'm getting out here. All right. So our overall daily profit, because I don't want to stay here and watch this thing just go slow and just consolidate towards the rest of the day for the next 2 hours. I don't have the next 2 hours to wait. So our profit, we just got out at 1,300. So you subtract 1,846. 1,846. We got it at 300 rather, not 1,300. 1,846 minus 300, and we made $1,500 for the day. That's fine. Okay, but just watch. You see the price? It's just gonna consolidate in this box. That's classic New York launch. The market has, in a way, it has shut down. So nothing's gonna happen. So this is where we are, folks. I hope you learned a lot today, man, because I was in here for almost a little over 2 hours. I was in here. I hope you learned a lot today. I did. I learned a lot today myself. I don't know if I'll trade tomorrow, but I'm not gonna go live. I'll just trade quietly. Tomorrow is Friday. I'm gonna be looking for something called TGIF. That's the kind of trade I'm gonna do tomorrow. TGIF. Looking for. So what TGIF is? Let me give you a quick summary. So if we go to the weekly chart right here, this is the weekly chart, right? This is the weekly chart. TGIF is the notion that this is now this candle that you're looking at, right? This candle right here is this week's candle. This whole candle, that's this week, which is, if you see here, if I touch the candle, you see on the bottom here, on the bottom down here, just look to the bottom, you will see, okay, it will give you the label. That's March 10th. So this is the week of March 10th, right? What TGIF is, hold on, what does this keep coming? Okay. What TGIF is TGIF is the notion that at the end of the week, which is Friday, at the end of the trade week, because the trade week starts from Sunday at 6 p.m. Eastern time, and it closes Friday at 4 p.m. Eastern time. Okay? So whatever this week, this big candle you're looking at, I want to separate it from this other candle. There's another candle that keeps sticking near it. I want to really separate it. So, okay, let's just highlight. Good. See this big candle right here, this big red candle? This is the candle this whole week. This candle explains what's been happening this whole week. All week. That's what's been happening, right? It tells you that the market opened up here this week on Sunday at 6 p.m. this past Sunday. It opened up here, and it has traded all the way down here. Now, what TGIF is the ICT is another ICT concept that at the end of the week, the last trading day of the week, the price is going to want to retrace to about 20 to 30% of the weekly range. So meaning this whole candlestick you see right here, right? On Friday tomorrow, because if you notice the price still going down, so it might even fill all here. On Friday, which is tomorrow, the price is going to want to retrace to about 20 to 30% of this weekly range. How do you do that? I have a Fibonacci set for that, right? So I take my Fib, I come from up here and go down here, all right? And then I go in here to look for, I have all my Fib settings. This is my TGIF prediction right here. You see that? I click on it and I hit OK. Now if you come back here, you will see that, oh, hold up one second. Let me take that out. That's not supposed to be there. Hold up. I didn't mean to do that. Okay, cool. If you look, let me move all these lines, all these other lines that are distracting. Let me move them out. Okay, just hang on one second. I want to show you something here. Because this is what I'm trading tomorrow. So when I come to trade, you can know what I'm doing. This is what I'm trading tomorrow. Okay. I want to hide all these lines. Well, we'll just leave them there. So if you look at this yellow right here, this yellow, this is the 20% mark of the weekly range, and this blue here, this is the 30% of the weekly range. The TGIF notion is that, and obviously this white dotted line right here is the actual 1% of the weekly range. That's where it'll start. So I set my, well actually I should take it back down, further down to the weekly range to bring this down here. Okay, so let me move these two yellow lines. I'll put them back. I don't want to confuse you. I'll move these two yellow lines, and I'll even move, yeah, I'll move these two yellow lines, and I'll move that pink line. All right. So if you look here, all right, this is the Fib setting for the TGIF, right? So the price started up here this week. It started here on Sunday, and it traded all the way down here. You see the wick? That's how far the price has gone. Right here is where the price currently is, but here is how far the price has gone this week. The TGIF notion is that tomorrow, which is the last day of the week, the price is going to want to trade back to 20%, which is the yellow line, or 30%. At least, it doesn't have to stop there. It could go even further into the weekly range. But at least the price is going to trade back to 20 to 30% of the weekly range. So tomorrow morning when I get up and I do my analysis, I'm going to see how far the price is within this weekly range. And wherever it is, I will set this Fib, this Fibonacci, right? I will set it. And wherever the 20 to 30% mark is going to be my target for tomorrow. That's where I'm going to be trading towards. So that's the TGIF. That's just a short version of what the TGIF is going to be, okay? And that's how I'm going to trade tomorrow. So with that said, folks, if you've been here, if you stayed through the duration of this, then you did well for yourself. Not for me, but for yourself. So on that note, adios.